place.
Shouldn't be a carry-on, choose find and fund by car.com.
Oh, just there, Dave. Smashing. Great. Really? Night, Steve.
Yeah, see ya.
Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL manage lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
This is a message from the government about the emergency measures to support the economy during the period of disruption caused by the coronavirus. To help you, your business, and your workers affected, you can apply for cash grants, business rate holidays, statutory sick pay relief packages, as well as the Coronavirus Job Retention and Self-Employment Income Support Schemes. For information, go to gov.uk/business-support now.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative with the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has ignored a call on purpose? Tick. Talked yourself out of a workout? Tick. Spent far too long scrolling on your phone? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
4 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash. The S&P advances after jobless claims surged by 4.4 million last week. That's slightly less than had been expected. Total job losses now exceed 26 million. A reading on private sector manufacturing activity topped estimates, though showed signs of deep contraction. In earnings, CSX rose after the railroad operator topped estimates, while chip makers Lam Research and Seagate Technology dropped after their results. We check the markets every 15 minutes. The S&P is now up 0.9% up 25. The Dow's up 0.8% up 186, and the Nasdaq's up 1% up 86. The 10-year is currently up 4/32, the yield 0.6%. West Texas Intermediate crude oil is up 28% at $17.70 a barrel. COMEX gold is up 1.2% at $17.58.50 an ounce. The dollar yen 107.69. The euro $1.812. The British pound $1.2369. Sales of new homes in the U.S. slid in March by the most since 2013 as the pandemic started to cause problems for the country's economy. Single-family home transactions declined 15.4%. That is a Bloomberg Business Flash. I'm Greg Jarrett. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Paul, there's a story that caught my attention in the past week. Disney, a company that you have tracked for years, stopped paying 100,000 workers, which is roughly half its workforce, laying them off even as it protects executive bonus schemes and a $1.5 billion dividend payment due in July. This has raised a lot of ire among a lot of people, particularly with respect to executive compensation, but also the dividend payment. Should they continue to pay a dividend as they lay off tens of thousands of workers to go on the public roll? This is a question in the forefront of many minds, both investment minds as well as political ones. And John Tobin has been thinking about it as well. He joins us now, portfolio manager of Epic Investment Partners. And you believe the companies should still maintain their dividends despite some of the catastrophic hits to earnings, as well as the layoffs that we're seeing that are now numbering into the millions. Why?
Well, Lisa, I think I'd probably take a more nuanced approach to answering that question. I think our view is, the way I'd express it is, we expect companies to continue to follow sound capital allocation practices and policies. And I think we need to look at this question more on a company-by-company, situation-by-situation basis. If a company is doing reasonably well and maintaining its revenues, earnings, and cash flows, even in this episode that we're working our way through, it has a commitment to pay dividends that it has promised to investors. And that dividend, by the way, is a flow of income to investors. So it doesn't go out into the void somewhere. Real people are getting that real dividend payment. So to cut off the dividend payment is a source of income in many cases to many investors and many retirees who depend on that source of income. So it's not as simple as it seems to be. Gee, times are really tough. How can companies justify paying dividends in this episode? And I think it's a much more complex problem in question than just that.
So interesting. How do you feel about, there's also some discussion about companies, John, that are receiving, I guess, some of this fiscal stimulus, and then also, should there be, I guess, conditions there to that stimulus in terms of executive compensation or dividends? How do you think companies are approaching that and investors?
Well, and I think that's a perfectly reasonable approach. If your business is so fundamentally challenged in this episode that you need to apply for government aid, it's not at all unreasonable that as a condition for receiving that aid, that you agree, at least for a period of time, perhaps for the period of time during which you're receiving the aid, to halt dividend payments to shareholders, to halt share repurchase programs, and to adjust executive compensation levels. That's not unreasonable. What is unreasonable, I would argue, is a mandate or a directive to a company that says, regardless of whether you apply or need aid, and regardless of whether your business judgment tells you that you're generating enough revenues, earnings, and cash flows to maintain your promises to your shareholders, you should stop anyway. I think that's problematic.
That's fair. And I think that people are looking at companies that are laying off significant swaths of their employees as candidates for potentially cutting their dividends. I guess this push-pull that you talk about, maintaining your promise to your shareholders and trying to edify your balance sheet at a time of unprecedented distress, that these two issues are really in stark contrast. I'm curious from your perspective, do you think that shareholders will take a more active approach in rewarding companies that act perhaps in a more socially responsible, I use that word, I hate using it because it could mean anything to anyone, but in a way that reflects something that feels right, whatever that means to them?
Well, that's an interesting question, and I suppose that there will be that sentiment out there that people will look at a company and say, gee, I like this company, they did the right thing, whatever that actually means. But I would also say from my perspective as a portfolio manager on a strategy that invests in companies that, we look for companies that have sustainable growing cash flows that support sustainable growing shareholder distributions. And we expect those companies to invest in the business and grow. We expect those companies to make a decision, a capital allocation decision. Can I invest to earn a rate of return above my cost of capital? And to the extent that I cannot, then I should return that capital to the owners of the business. And those are the kinds of companies that we're looking for. So for me, and I think from a sound corporate governance and corporate finance standpoint, that should be the driving principle for these corporate management teams. And rather than doing the right thing and cutting dividends just because of the bad optics of paying dividends.
So, John, what are some of the sectors or companies that you guys are looking at now, given, again, just this tremendous dislocation that we've seen in the economies and in the markets? We got some more jobless claims today that just confirms how rough things are out there. How are you navigating it?
Well, it's tough to navigate, to be sure. It's an unprecedented situation that we're in, and our approach as we manage the portfolio is to try to look really, really carefully at each and every position that we have and assess the company's ongoing cash flow sustainability in this environment, sort of weed out the ones that we think are weaker and that we need to remove from the portfolio. But I will tell you, here we are in early days of quarterly earnings, and we've already seen, I think, a few companies maybe surprise the market with the degree of resilience that they have in their underlying businesses. So, for example, over the past week, Johnson & Johnson reported earnings and raised their dividend. Procter & Gamble reported earnings, maintained guidance, and raised the dividend. Travelers, the insurance company, reported recently, raised a dividend. Lockheed Martin reported, and their results were quite good. So across the economy, across multiple sectors, we're actually seeing companies that are navigating themselves through this difficult episode and maybe doing better than you might expect.
Hey, John, thanks so much for joining us. We really appreciate your thoughts and perspectives. John Thoman, he is portfolio manager and senior research analyst for APOC Investment Partners. They have about $18 billion under management. So some really interesting thoughts there, Lisa, as it relates to dividends. And in some scenarios, John arguing that companies, as proper asset allocation, should continue paying dividends, but clearly there's some issues there as it relates to fiscal stimulus.
It's an important point because real people get those dividends and use them for income, but there's a question of what it means to get government aid when you lay off tens of thousands of workers and send them to the public rolls, and I think that this is going to be a debate in the front and center for a long time to come.
Absolutely. Coming up, Bloomberg's Tom Keene sits down with David Malpass, president of the World Bank. But right now, let's head down and get Bloomberg Business Flash with Greg Jarrett. Greg, what do you have for us?
Well, I see that we've got stock markets climbing. Investors are looking past another round of bleak jobs reports. And oil prices continue their comeback from the dead, or better put, perhaps historic lows. We check those markets every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is currently up 1.1%, up 30. The Dow is up 1.1%, up 266. And the NASDAQ is up 1.2%, up 103. The 10-year is currently up 1/32 with a yield of 0.61%. West Texas Intermediate crude oil is up 29% at $17.70 per barrel. COMEX gold is up 1.3% at $17.62 even per ounce. The dollar yen, 107.67. The euro, $1.0836. And the British pound, $1.2406. And that's a Bloomberg Business Flash. I'm Greg Jarrett.
Thank you so much, Greg Jarrett. Right now, we are looking at a rally in markets, although not dramatic. Still, people trying to look to the optimistic side, given the fact that the unemployment figures perhaps weren't as bad as people had thought. We do seem to be getting closer to some sort of agreement on a second phase of the funding for small businesses, as well as additional aid packages from the U.S. government. Coming up, we're going to hear from the president of the World Bank. That's David Malpass, who's speaking with Bloomberg's own Tom Keene. And I'm very curious to hear what he has to say about the developing world in particular, which is in a world of hurt and doesn't have the financial resources to necessarily mitigate some of the pain.
Yeah, exactly. And one of the things I hope to hear from David Malpass is to the extent that there's any global coordination among, the G20 and some other countries in terms of dealing with this global pandemic. It seems to certain observers that maybe there isn't as great a global coordination as perhaps there needs to be, given that this really is a global pandemic here. So with David Malpass at the World Bank, certainly have a view there. So even within the U.S., Lisa, it seems like the federal effort isn't perhaps as coordinated or as at the forefront as much as it needs to be. It's kind of up to the states here.
Yeah, and forget about it when you turn to Europe and when you turn to the emerging markets. Somebody once said in a recent note that I was looking at that it's a fire hose of fiscal stimulus in the developed world. And in the developing world, it's like an eyedropper of stimulus with just not that much money and resources. And it's really unclear as far as how prevalent the disease has spread, as well as future shutdowns and what that could potentially mean. Also a concern, how do you even coordinate some sort of response to the data, to the testing, and some of the actual viral component of this whole issue?
Yeah, exactly right. Within the U.S., it's all about testing, and the question is, should the federal government be taking a bigger role there in that? But right now, the states are kind of going on their own.
Okay, right now, let's hear from David Malpass, president of the World Bank, speaking with our own Tom Keene of Bloomberg Television and Bloomberg Radio, talking about the world's response to the pandemic of the coronavirus. Let's bring it over to you, Tom.
And we welcome all of you on Bloomberg Television and Bloomberg Radio to a timely interview as we've spoken to Fed officials over the last number of days and weeks, and of course with the leadership of the International Monetary Fund. It is as important to speak to the span of the World Bank. The World Bank has been followed now by two back-to-back scientists, and Dr. Kim of Dartmouth, of course, with his medical career of great acclaim, and now the physicist from Colorado College, David Malpass, appointed by President Trump to take over the responsibility of the World Bank, of course, not knowing that this great pandemic would come. We're thrilled that we could have David Malpass with us today, on Bloomberg. David, I want to get right to it. Every question is precious as well. What is the next step for the World Bank? I think our audience worldwide understands Chairman Powell's mission. They understand what the IMF will need to do with beleaguered countries. What's your first order mission at the World Bank?
Hello, Tom. Good to see you. The first order was to set up healthcare programs for the emergency, and we managed to get 100 countries that have arrangements with the World Bank that provide things like personal protective equipment into their hospitals and so on. So that's been good. And now the next step is to help the countries get ready for a recovery when it happens. And we're specifically thinking or working from a focus that they need to have more transparency in their debt. They need to work on the fuel subsidies. With oil prices down, it's a lot less critical to the people of the country to have the government keep subsidizing gasoline. So that's something that they can work on. And then social protection. That means a safety net for the poor. But what we are trying to do is get cash to people, actual cash to people, rather than funneling it only to the government entities.
David, the medical professionals that we've spoken to at Bloomberg make very clear that the third world countries, the World Bank countries, if you will, are really fragile, and particularly fragile in their medical infrastructure. The World Bank has to provide leadership there. What is your action plan to improve their ability to respond to this virus?
Yeah, this is a big challenge. It's a deep recession, and it's particular as with the advanced countries shut down, the poor countries don't have markets. They don't have remittances. That's very important because they've been used to getting money from people sending money back home. So what we're trying to do is strengthen the healthcare systems themselves, and so that's different in each country. Some countries need more hospital beds. Some countries need more equipment. And so that's exactly what we're trying to do. And as I said, 100 programs in just a month is a very impressive. And people worked really hard over the last month, both in countries. The World Bank has offices in a lot of the countries. They had to connect up, often by video conference, with government officials in order to get the list of things that were needed in the country. And so that's all going on. And we're also trying to do bulk purchasing or group purchasing and advanced purchasing in order to help groups of countries at the same time.
David, I've mentioned at the beginning, we have two presidents of the World Bank, back-to-back scientists, and Dr. Kim, and of course your work in physics at Colorado College. We have a president of the United States who some would suggest anti-science. He's recently gone after the World Health Organization as well. I want you to speak now of the institutional integrity of the World Bank, like the WHO, and I want you to speak to Americans who would suggest the integrity of the World Bank is not there to distribute the money, to distribute the funds. How will you spend the money, the millions and billions of dollars over the coming months?
Well, Tom, that's a hard question. It's valid to ask, and it's valid to ask the World Bank to defend that. So the governance structures are pretty strong. So as countries ask for a loan for a given area or a grant, the World Bank makes both loans and grants. Then we can look at the system that the country is proposing to use to monitor that. And so my sense is there is very good integrity of the flow of money from the World Bank. It gets hard, there's so many of the international organizations around the world. It's hard to generalize into those, but for the World Bank, we have a system where we're looking hard at what we want to achieve in the country, what the country can actually do, and then the integrity of the flow of money. I mentioned the importance of getting cash to actual people in the countries. I think most Americans would support that idea. If you can have some confidence that money is going into people in poor countries, then we're a generous, the U.S. is a generous country, and that shows up.
David, I'm so glad you brought that up, and I saw that famous mail password FAST in your personal report on remittances the other day. This has been a great surprise, and I think for our viewers and listeners across America, it's shocking the amount of money that is remitted across the World Bank world. Explain to us the dearth of remittances right now and what that means to these poorer countries.
I'm so glad you raised that. So, as in poor countries, they often and almost always want to work, want to find jobs, want to do things useful, and sometimes they cross borders to do it. But then they're generous. As soon as they have a job, often they're finding ways to send money back to their family. And the problem now is multiple. One is that the people have lost their jobs in the advanced economies, and so you see that in both the U.S., in Europe, and that's hurting the ability of people to send money home. But then there's also the problem of the systems are breaking down, some of the banking systems and the ability of the transfer agents to actually connect. So the World Bank is very involved in that. And also, one of the things I've been pushing is the importance of digital financial services. Actually, if you can show to workers that their money gets to their family back home, they're even more generous, and they're working harder, sending more money home. That might be in Western Europe, sending it into Eastern Europe, or sending it into North Africa. All of those are very valuable for the poor that are left back home.
David, in the time that we have left, I want to speak of the uproar as the president selected a new World Bank leader. And of course, you were caught in the crosshairs of that. What's been your biggest surprise at the World Bank? The picture was painted of a huge bureaucracy, lots of wasted money. It would be opaque, and Mr. Malpass wouldn't be able to get anything done. What's been the biggest surprise for David Malpass of entering the doors of the World Bank?
I've been happy with my ability to work with personnel system within the World Bank and we have very strong people in spots. There's been turnover. Kristalina Georgieva became the managing director of the IMF, and so that created, she was number 2 at the World Bank. That created a hole, but we filled it. We were able to fill it quickly. So I guess the biggest surprise, Tom, is that the challenge is actually with with the countries themselves. What I've asked us to do at the World Bank is work very closely with the client countries on programs that will actually raise median incomes and address poverty in those countries. And that turns out to be the hardest part of the job. Vested interests are a big challenge in much of the world, where they want to keep the money for people that already have quite a bit of money. And what I'm trying to do is get the median income to rise for these countries.
In this crisis, David, will you have to go out and find new funds? And what would you say to the American public skeptical of donating further to the World Bank?
The American public has been incredibly generous around the world. You know, you hear a lot of negativity in the U.S. about but the reality of the world is the U.S. is a strong leader in the world and a strong leader in the World Bank. It's the biggest shareholder, a very big donor into the World Bank, and that is passed on in terms of usable funds abroad. So I guess what I would say to people is be clear in the national interest, whether you're in the U.S., whether you're in Japan, whether you're in Europe. What's the national interest? And then find organizations that are effective in order to channel that interest. And it works. The World Bank is able to work across it's really 150 countries in order to have an impact on better programs, less poverty, clean water, electricity, better infrastructure systems, better climate, better environment, all of the things that are needed. So it's working well enough. It just means that there's lots of work, lots of steps needed, and especially now with a global recession.
Mr. Malpass, thank you for joining Bloomberg today. David Malpass is the president of the World Bank. We thank you so much for listening on radio today. Back over to you on radio, and to all of you on television, we say thank you as well.
That was Tom Keene sitting down with David Malpass, president of the World Bank, discussing the World Bank's response to the coronavirus. It is a global response, Lisa, and it requires extraordinary coordination, as we're listening to Mr. Malpass, in terms of trying to coordinate support and aid, whether it's loans or grants, to member countries around the world trying to come to grips with the economic impacts of this virus.
It feels a little bit like corralling cats. I mean, honestly, if you think about how, in nations within themselves can't agree. Europe is a mess as far as trying to come to an agreement on how to bail out this problem. And we can't even get our arms around the scope of the issue. So it's very challenging to put together a global response, and yet definitely a real focus on trying to, given the severity of the shock.
Absolutely. Right now, let's head down to Washington, D.C. Let's get some world and national headlines with Nathan Hager. Nathan, what do you have for us?
Well, Paul, President Trump says he disagrees with Georgia's governor on reopening some businesses during the coronavirus outbreak. Places like tattoo parlors, movie theaters, and nail salons are going to be allowed to open as soon as tomorrow. The president, though, says it's too soon, putting himself in line with health experts like Dr. Anthony Fauci with the National Institute of Allergy and Infectious Diseases.
Although I know one has the need to leapfrog over things, don't do that. Do it in a measured way. This is a successful formula.
The president had been urging states to reopen as soon as possible, signaling support for protests against social distancing in states with Democratic governors. There are growing signs the outbreak could affect the November election. Bloomberg's Amy Morris has the latest polling figures.
Two Fox News polls show Joe Biden has significant leads over President Trump in Michigan and Pennsylvania. A Quinnipiac University poll finds that if the election were held today, Biden would top President Trump in Florida, 44 to 37%. And a Fox News poll shows the way the president has handled the pandemic so far has spiked the number of undecided voters from 5% to 12% in the past 2 weeks. In Washington, I'm Amy Morris, Bloomberg Radio.
The House is set to pass another nearly $500 billion in aid for small businesses and hospitals during the pandemic. That debate is underway on Capitol Hill. Lawmakers are being offered masks and gloves as they hold a series of votes on the measure. That's so they can maintain social distancing. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are awaiting commentary from Washington, D.C. Mayor Muriel Bowser as we get the roll of daily briefings on the state of the coronavirus in a number of the hot spots, Washington, D.C., New York, Connecticut, and New Jersey. Those are some of the briefings that we've been tracking, importantly, to get a gauge on just where we are in this pandemic. In the meantime, in the front and center for investors is trying to figure out what data to look at in order to determine the scope and the length of this pandemic, of this issue. And joining us now is someone who has an interesting take on this. Sam Hendel, president of Levin Easterly with $3.6 billion of assets. Also the founder of Data Miner, which is very important as it comes to assessing the current crisis. Sam, as you devised an investment strategy, what data are you looking at?
Sure. Hey, hi, Lisa and Paul. How are you? We're really looking at, really what we do, we're value investors, and the most important thing for us is talking to companies, talking to the management teams, and really getting a firm understanding of what's going on in their business. And that's on the micro level. On the macro level, there are a lot of data points that are coming out, and I certainly do use Data Miner, a company I founded with two of my college roommates about 11 years ago, and that company is really on the forefront of getting information from social media and about 10,000 other sources. Right now, we're working with a lot of the government agencies who are on the front lines of this, and I'm seeing data on outbreaks ahead of time, sort of before the testing hits, what people are saying on the ground, and we are using that to sort of determine, and I think it's a very difficult question, how long is it going to take for our economy to reopen? So on the investment side, we are really talking to our companies and not trying to, not really trying to aim and guess what the timing is for things to reopen, but still finding good businesses that are down in value, cheap on a free cash flow basis, and have catalysts to unlock them, and some things that might be defensive in this time, but also have some offensive components that we can take advantage of these companies when the world reopens again.
So, Sam, what are some of those sectors that you think have some of those characteristics?
Sure. I mean, the most defensive sector, clearly has been consumer staples, healthcare. There are a lot of companies that are actually doing well in this environment, and it's unusual. The consumer has completely shifted spending. Everyone's staying at home and ordering food in, whether it's grocery or even some delivery, and they're spending money on telecom. They're spending on their wireless bills. They're spending on cable and entertainment. But a lot of the other consumer discretionary has gone out the window, and we're really looking at trying to find a combination of defensive sectors and defensive stocks within those sectors, but also looking at stocks that have been very hard hit by this, whose businesses is impaired in the near term, but who has a strong balance sheet and can survive this and has a very strong business coming out of the crisis. So it's a combo of really positioning our portfolio to take advantage of the companies that are succeeding in this environment, and then companies that we think will be the best to bounce back once things go back to work.
I've heard a lot of people say that there are going to be a lot of opportunities emerging from this crisis, and we certainly see a rapidly increasing pace of credit funds being raised by the likes of Oaktree and Fortress. I'm trying to understand, though, how you get to a place where you can take advantage of these opportunities. Did you have excess cash going into this? Are you selling existing positions that you think are just going to be out of money for a long period of time?
Yeah, we've certainly shifted our portfolio in a significant way. We really didn't have much exposure to travel names or the cruise lines or airlines or anything like that. But you had a period in really mid to late March, which was a tremendous amount of chaos. and people were selling stocks, and it was really, I joke, the computers were selling, and so you have all this quantitative and algorithmic selling, and for people like us who are talking to the management teams and understanding the companies, it's great that when we talk to a company whose stock is down 50%, and this is the case with Tyson Foods, had a conversation with them, and they said, yeah, our business is doing great. We're not selling to the prepared food markets, but we're selling. We've shifted those supply chains, and we are selling a lot into the grocery store, and we can't sell enough chicken to people, and we can take advantage of that during these challenging times.
So, Sam, I guess one of the questions is just from stepping back and looking at the markets that had that big, 30% plus move, peak to trough there in that March period that you were just referencing. But since then, we've had, almost a 50% retracement back up. How are you viewing the market overall? Do you think there's risk that we retest lows in the context of a longer bear market?
Yeah, I do think that this is not a blip. The change in the economy right now and the uncertainty around what's happening and the ability for companies to resume normal operations, it's very challenging to figure out. So I don't think this is a blip. I think this is similar. I mean, it's a very different type of crisis than the global financial crisis in 2008. But we are following that playbook here. We're trying to hit singles. We're not trying to call the bottom. At Levin Easterly, we're certainly our mission is to know our companies, and we have a concentrated portfolio of about 35 to 40 names that we know very well, and we know their management teams, and we're really looking to take advantage of some of these dislocations. And my view on the markets, I do think the market may have snapped back. The sell-off was without regard to specific companies, and now we're seeing some, I guess, order in the chaos where you're seeing the companies that are doing a little better start to outperform, that have that have a little bit more of a clear path. But it's still a very uncertain time, and we're just trying to keep a clear head and follow our playbook from 08 and 09, buying those good companies with good balance sheets that are down and out of favor. And we think, in the long term, whether coronavirus, comes back in the fall, winter, or we're not able to open up the economy for a while, that they still have enough ballast to be okay during that period, and they'll do very well whenever the economy opens.
We're speaking with Sam Hendel, president of Levin Easterly, with $3.6 billion of assets under management. Sam, it's a very tricky time since so much of the economy depends on science and on the medical community and the fight against the coronavirus, which has put investors in this awkward position of having to moonlight as virologists as they try to bet on when the economy may reopen. What specific data points are you looking at to determine that path, given that even medical professionals basically are shrugging their shoulders and saying, we just don't know?
Yeah, and I'm certainly. I think everyone's unfortunately moonlighting as a late night virologist here. But we're not we're not trying to call that bottom. But the data points I'm looking at, we're looking at number of cases per day, hospitalizations, and you see the trend line. The U.S. has flattened the curve. You're seeing today in New York we have fewer hospitalizations than we have yesterday. That's a big positive, and so I do view that as a cautious yellow light for maybe being a little more offensive in our portfolio. That being said, some of the data I'm seeing from in my source at Dataminer, I see really about 10 to 12 days before the caseload hits, I can see hot spots around the country and around the globe. I'm very concerned about the South in the U.S. India could be a dramatic humanitarian disaster that we just don't know about yet. And, some countries in Europe and South Korea in particular have done a great job on testing. We haven't done a great job here, and we just don't have enough tests. And so, I think it's very challenging for the economy to reopen when we're flying blind here. And I sort of take the example of, the meatpacking facilities that are closed right now. There are 3 big pork facilities that are closed around the country. What happens, if we reopen the economy and there's a case at a school or at a plant facility. What's the path that we take? Are we able to test all these employees on a day-to-day basis? And right now we're just not, and we need to build up that capacity, I think, before we can really, get things moving in a faster way. But I think we will open slowly, but I'm still cautious about the ability to do it in a way where we have procedures in place. I think individual companies are starting to put that, are starting to put together plans, but we probably need a little more on the nationwide basis on testing.
Hey, Sam, thanks so much for joining us. We really appreciate your thoughts there. Sam Hendel, president of Levin Easterly, joining us on the phone. We appreciate his thoughts. Lisa, let's talk to our good friend Max Neeson, Bloomberg opinion columns covering healthcare. We love to talk to Max, Lisa, because we get kind of the update from the healthcare side of things. Lots of developments every day from the big pharma companies to the biotech companies. Max, thanks so much for joining us. What is kind of the latest from your perspective from the healthcare angle as it relates to testing? I think that's kind of what we hear a lot from all members of this whole discussion is the need for testing. Where are we on that?
So, continual gradual improvement, but well short of where we'll need to be through the reopening process and into the fall. I think the really important thing to emphasize is that the scale of testing needed for the next phase is substantially larger than where we are, because that's when you move beyond just doing the kind of, first order diagnostic testing that you think about, people that have symptoms or have been exposed, and moving on to a more of a surveillance type system where you're not just broadly testing symptomatic people and their contacts, but random segments of the population, people working in high-risk settings. All of these things that you need to do at a very high volume so that you can, stop nascent outbreaks before they happen, just because of the nature of this disease, the fact that it spreads rapidly and sometimes asymptomatically. That's what it's going to take to be able to prevent really serious outbreaks from happening when we don't even see them, and having, second wave outbreaks that are of a high magnitude in the future.
Meanwhile, we're seeing certain pharmaceutical companies benefit from the increased spending stemming from the pandemic. Eli Lilly shares surging today after their results. What did we learn?
Yeah, so this has been sort of a consistent trend from big pharma, generally, doing relatively well since any negative impact came towards the end of the quarter, as you start to see declining doctor visits leading to fewer drug starts or slowing trends for physician-administered medicines. But what you also see is for certain companies, and Lilly being one of those, you saw a sort of stocking effect where people that can get prescriptions ahead of time, they got longer prescriptions, or they moved up doctor visits so they could actually get their medicine ahead of time. So this all sort of adds to a sort of overall sense in the pharmaceutical industry that while there definitely will be negative impacts from those decreased visits, from the fact that fewer people will start on some medicines because they can't see physicians, there will be positives that offset that, even though you have those potential longer-term effects. Like, it's hard to run clinical trials now, given how dangerous it is to go to the hospital for anything but COVID. But Lilly doing quite well and expecting to have a relatively good year.
Max Neeson, thank you so much for being with us. As always, Max Neeson, Bloomberg opinion columnist covering all things healthcare, and my in-house co-doctor for a number of years when we worked on the same team together in a couple rows away from each other. I'm Lisa Abramowitz, along with my co-host and colleague Paul Sweeney. Coming up, we're going to hear from the Washington, D.C. mayor. This is Bloomberg Markets.
Business is like just this wall and that one to do, Dave, and then we're done. Whoop! Oh no!
Hello, Steve the Sparky.
Pass us that roof tile, Chris.
Yep, sure. I'll be fun. Oh no!
Saved by the gutter.
Built to rough it with contractors. Samsung Rugged Devices. Easy to use, hard to break. Explore the Samsung Rugged range.
The pressure washer that means your patio is barbecue ready. The 4K projector that brings the thrill of the cinema to you. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can make the most of your leisure time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Typical Danny. Last night I was chilling with my girls, but ended up spilling my Chardonnay all over my fave lilac nightie when I saw the photo I was tagged in. State of my fake tan. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Thank you.
Thank you.
Thank you. Thank you.
Thank you.
Thanks to national lottery players, communities across the country are about to benefit from up to £300 million of funding.
Thank you.
Thank you.
Money that will help support the most vulnerable in these exceptional times.
Thank you.
Thank you.
Food banks, local health organisations, charities combating loneliness, and thousands of other community causes will all get vital resources.
Thank you. Thank you.
And it's all thanks to you, playing the National Lottery. Your numbers make amazing happen.
24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, we are awaiting comments from D.C. Mayor Muriel Bowser as she gives her coronavirus briefing. Plus, we're going to speak to Shelley Sun, founder and CEO of Bright Star Care. She's going to discuss the impact of the coronavirus on the home health care business. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg.
Moving on up, Paul, for day number 2, investors are weighing the latest economic and earnings data to determine the virus's damage to global growth. Crude oil's up above $15 a barrel in New York. We check the numbers every 15 minutes throughout the trading day on Bloomberg Radio. S&P 500 is up 1.4%, up 38. The Dow's up 1.4%, up 328 now. And the Nasdaq's up 1.4%, up 122. The 10-year is up 530. 6%. West Texas Intermediate crude is up 29% at $17.81 a barrel. COMEX gold is up 1.1% at $17.5720 per ounce. The dollar yen is at 107.61. The euro $1.830 and the British pound $1.2385. Sources say European Central Bank President Christine Lagarde told EU leaders that the euro area's gross domestic product could fall by as much as 15% as a result of the pandemic, and they risk doing too little, too late. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Lisa Abramowitz and Paul Sweeney.
Thank you so much, Greg Jarrett. As we look at a rally in large cap stocks, let's take a look at these small and mid cap shares. Dave Wilson, Bloomberg stocks editor, joining us as he does at this time for what has become my favorite segment. Dave, what are we seeing in the small caps?
Well, we're seeing the smaller companies up more than the larger ones today. The Russell 2000 index higher by 2.3%, and the S&P 500 is up 1.3%. The May of the Russell's biggest gains belong to energy producers that had become penny stocks, trading less than $1. The biggest advance belongs to Oasis Petroleum, whose ticker is OAS, and its shares have more than doubled. Laredo Petroleum, the ticker there is LPI, is up 52%. And Whiting Petroleum, which began this month by filing for Chapter 11 bankruptcy, It's also more than doubled. Sleep Number, ticker SNBR, has risen about 30%. The mattress maker's first quarter earnings and revenue were well above analyst average estimates in a Bloomberg survey. And Immunomedics, ticker IMMU, has added 22.5% after winning U.S. approval for a breast cancer treatment ahead of schedule. The ruling was made 3 weeks after Goldman Sachs cut the stock to sell from buy. Now, the Russell's steepest drop belongs to Netgear, ticker NTGR. The maker of Wi-Fi network equipment has fallen more than 16% after withdrawing fiscal year forecasts. And Crux, ticker CROX, has lost more than 6%. First quarter results showed the shoemaker's earnings missed estimates for the first time in more than 3 years.
Bloomberg Stocks editor Dave Wilson, thank you so much. Well, what we've seen during this crisis is corporations, sensing the long-term economic uncertainty, are rushing to their banks, looking for loans, looking to tap credit facilities, looking for liquidity. And that's given a lot of leverage, Lisa, over to some of the banks. And really interesting. Joining us right here is Paula Seligson, Bloomberg debt reporter.
Actually, I think Muriel Bowser is about to take the podium, so I should just warn you that she may be coming in. But carry on.
Very good. Okay, we'll keep on top of that. So Paula Seligson, Bloomberg debt reporter. So Paula, give us a sense of what's going on between the banks and lenders.
Absolutely. Thank you for having me. So basically, first to explain the kinds of loans we're talking about, these are these special relationship type of loans that banks offer as groups to their companies. And so in March, we saw this mad dash of companies tapping existing loans and also beginning to raise extra short-term loans, right? There's quarantine, companies need cash, so they're getting it from their banks. And usually this part of the market is pretty sleepy. Things don't change much. But with this shift in sort of supply and demand, all of a sudden, for the first time in years, the banks have been able to dictate some higher prices and safer terms for themselves.
Hey, Paula, right now, I think Lisa, has the mayor started yet?
Yes, I think that she has. I'm so sorry. Paula Seligson will have to rejoin with this another time, covering all things credit related for Bloomberg News. Definitely an issue. Right now, let us hear from the Washington, D.C. Mayor Muriel Bowser as she gives her daily briefing.
Last week, we know that the White House released guidance around what it takes for cities and states to reopen, and we have looked at this guidance and, as I have stated previously, believe that it is a good framework and in line with what we are looking at locally. And so today I want to share some information with residents and businesses about the criteria we are considering when to reopen and what we're doing to plan for that. Dr. Nesbitt has discussed previously that our thinking is in line with the White House guidance, but there are a few things we need to see before lifting restrictions. And first, that is to observe a consistent downward trend of new cases over a 2-week period. Also, that our healthcare system must be able to treat everyone who needs care without the use of crisis standards of care. In other words, we need to make sure that we're able to provide appropriate care for everyone who needs it. We all know that our community has made too many sacrifices to move forward too quickly or in a way that doesn't prioritize the health and safety of our residents. So we will be deliberate and strategic in our plans to reopen. In addition to meeting this gating criteria, we also know that any effective response in reopening will require widespread contact tracing abilities in order to control and contain the virus. So we need to know who has it and who has been exposed to it. Today, DC Health has a team of about 65 contact tracers, and we are in the process of building that team to over 200 contact tracers. And in the coming week, DOH will make public how we intend to hire for those positions, and we will be advertising for hiring for those positions. But we know that based on our current projections, in order to move safely through phase one of the reopening plans, we will need a team of about 900 contact tracers, and plans for how to build that team are underway. Contact tracing alone, however, won't be enough, and we also know that having widespread and accessible testing will be needed. Yesterday, I shared a few ways we're expanding testing. A new public testing site is open today. I had the opportunity to drive through this morning at UDC at Bertie Bacchus, which is just across from the Fort Totten Metro. Testing of some asymptomatic individuals and the use of rapid point-of-care instruments in some of our congregate settings is expanding our testing capacity in the district. DC Health has also looked at the collective testing capacity of sites across the city. And right now, combined with public and private testing, we have enough platforms to run 3,700 tests per day. And just yesterday, we learned that our public health lab will receive a new instrument that will double our capacity. So we're pleased to share that news. So now that work continues, we want to make sure that we're able to take full advantage of that capacity. And that means continuing to call on the federal government to support cities and states with procuring all of the resources that we need to conduct massive and widespread testing. So having discussed our work on contact tracing and testing, we want to talk about how we're thinking about our reopening strategies. Of course, one of the very distressing aspects of this pandemic has been the racial inequities and how they play out right in front of our eyes with the data I report each day. And it's not just distressing, it's also very scary to a lot of people and a lot of families in Washington, D.C. And I've said several times that when we get on the other side of this, what that means in D.C. and across the nation is that we have to do better and we have to tackle the longstanding inequities that are causing these disparities. Disparities that didn't just appear during this pandemic, not last year or the year before that, but for decades and indeed centuries. And so as we think about reopening, we also see this as an opportunity, not just to go back to the way things were before, but to do and be better than before. So we're going to have to do better with limited resources, but we have a once-in-a-generation opportunity to reopen our city in a way that builds a more equitable D.C., and we should not let this opportunity pass us by. It's also important to me that our plans to reopen the city are community-driven and informed by community voices. And so just as the government cannot solve this pandemic alone, we cannot reopen alone. We all need to be working together to make sure that we're listening to our health experts, but we're also listening to the needs of our businesses and residents. So together, we need to create a plan that is based on science and tailored to what the Washington, D.C. community needs. So right now, I am putting together a Reopen D.C. advisory group comprised of government and community leaders. This advisory group will have 12 committees that will guide when and how we reopen, as well as how we monitor our progress. There will be a committee of co-chairs, a committee focused on equity, disparity reduction, and vulnerable populations. Public Health Innovation and Workforce is another committee. Transportation and Infrastructure, as well as Open Spaces and Recreation, will form 2 committees. Education and Child Care will be a focus. Government Ops, Public Safety, and Criminal Justice will be another focus area. Faith, Arts, Culture, Hotels, and Entertainment will be a focus area. Restaurants and food retailers will be a subcommittee. Retail and Small Business, a committee. Human Services, Social Services, and Health. And finally, Real Estate and Construction. The advisory group will be advised by the Johns Hopkins Bloomberg School of Public Health, and the work of the 12 committees will be guided by the public health principles for a phased reopening during COVID-19 guidance for governors, also published by Johns Hopkins School of Health. And here you can see that we are focused on 4 guiding values and priorities for the reopened DC group. First, we're going to be focused on health. Obviously, this pandemic has exposed wide health disparities. So this means that we will be thinking about how we improve health outcomes, especially for African Americans and our vulnerable populations. It means helping our small business owners get back on their feet. It also means how we create new job opportunities and new opportunities for our students. Many people have been affected in different ways by this pandemic, physically, emotionally, and financially. And no matter how someone has been affected, we will attempt to address their needs. We want to provide, of course, a sense of hope about what's on the other side of this. Clearly, you've heard me say before this pandemic, we were a growing, thriving city that was very secure financially and investing in the inequities we saw in the city. And we'll be that city again, but stronger and even more focused on all of the things all of the areas for improvement in curing inequities in our city. Of course, in many ways, these priorities and values are not new. In fact, we recognize these priorities, health, opportunity, prosperity, and equity from the final draft of the comprehensive plan that we released last fall. And today, we are sending the updated comp plan to the DC Council. The comp plan will help guide us through as we recover in a way that works for current residents and future generations of Washingtonians. So I know Washingtonians, like I am, are eager to get on the other side of this, and we have to keep working together to flatten the curve. I just commented to my team before we came in here, as I was coming here, it seemed like I saw more people moving around, more people driving, more people going from place to place. And I want to remind everybody very clearly that we are in a stay-at-home posture in Washington, D.C. until at least May 15th. You should only be going out for essential work, exercise, food, or medicine. And then you should be going back home and staying home. So I just want to remind everybody that our orders to wear masks on those essential trips is not a replacement for staying at home. So let us, while we know that things could be worse in the district, we want to save as many lives as possible. And we do that by staying home. So with that, we have time for a few questions today. We do have a hard stop.
We've been listening to the Washington, D.C. Mayor Muriel Bowser give an update on what they're expecting going forward in the Washington, D.C. region, saying that they are in a stay-at-home posture until the middle of the month and talking about the coordination underway in order to get the economy restarted eventually when there is sufficient testing and other infrastructure in place. Right now, we want to shift the conversation, Paul, to what is going on in what has become the epicenter in some places of the crisis, which is nursing homes and healthcare centers for immunocompromised individuals. And there's no one better for us to speak to than Shelley Sun, Chief Executive Officer and founder of Bright Star Care, which is a national private duty home care and medical staffing franchise. So with a national look at some of those more vulnerable individuals, Shelley, can you give us a sense of how big of an issue the coronavirus and its spread has been for you and your staff?
Thank you so much. I think for us, we came into the crisis with all of our locations Joint Commission accredited. So, hand hygiene and safety protocols were paramount to our day-to-day activities. So we have had, relatively minimal, less than 5% impact of our caregiving staff and our clients. But it's certainly something with the vulnerable population, the most at-risk population that we take care of every day, that we've tried to make sure that we've taken what was a higher standard before and elevated it. We began looking at PPE orders back March 7th, back before, it was really, starting to affect our business and we were seeing any positive cases at all. We were in a 4-week queue to get PPE ordered. We've made available to every frontline worker an N95 mask because we believe it is essential when they're going in and out of a client's home. There's no way when you're providing personal care or skilled care in the home that you can be 6 feet apart and do that type of care. So making sure that we contain the virus and not have it spread to our most vulnerable, keeping people at home, allowing them to recuperate if they get it at home and not further overtax our hospital systems is how we've really tried to lean in and be part of the crisis. I think generally what we've seen across the industry is where you have much more people coming and going or clustering of people. So you've seen nursing homes much harder hit. And in the homes, we had to really, draw a fine line on those where we had deployed PPE early, but some of the hospice and Medicare home health that might be coming in and out of the same home were not. So we required, if they were going to, that we were educating the family on what those employees of other agencies should have if they're coming in and out of the same home. So we kept the client safe, but also our workers that would be coming in and out of that environment. Because the cases that we did see early were from a hospice worker or Medicare home health worker that tested positive. And then we know that our worker had been exposed. In most of those cases, our worker did not contract. But we increased our standards for the home, for our caregiver, but also the partners in the care continuum that we were alongside of on a daily basis.
So, Shelley, have you in the home healthcare space seen a surge in demand as this coronavirus puts people in hospital, but then maybe they come out of hospital, or maybe people choose home healthcare versus going into what seems to be a much higher risk nursing home or type of environment?
Yeah, I think you've seen an interesting trend over 6 weeks. So I think we're starting to see a surge in referrals. We're at all-time high the last 10 days in terms of referrals and inquiries for care compared to the 3 or 4 months prior. So I think you're starting to see people come through hospital stays, get ready for discharge, and want to go into a home environment and have that care continuing them to rebuild their ability to ward off anything else and safely transition into the home. During the early stages of the crisis, we saw quite a few of our clients, and we've been tracking it. We service about 15 to 20,000 families in 40 states. We had about 400 clients across the country, kind of early stage, mid-March, stop care. We've seen about 10 to 15% of those since come back because we're tracking that as well, where I think people thought it might be a 2 to 4 week scenario. And now as we look at that, and it's more months, maybe over a year in terms of vaccination and completely being able to kind of return safely out into the environment for the most at-risk population. So I think what we saw as original drop off, some of that's starting to recover.
Shelley, your company has over 20,000 caregivers and 4,000 nurses, and you're in one area of the economy that may be a bright spot for hiring right now amid an unprecedented surge of layoffs. And I'm wondering how easy it is for you to find individuals to hire at this time and just in general as the president seeks to limit some of the immigration going forward.
Yeah, I think it's a great question. I think, up until we were able to deploy PPE, which happened last week, beginning of the week, we were able to start deploying PPE. I think now it's becoming easier for us to be able to, give the message that we're able to keep our caregivers safe, as well as encouraging to come to or back to the workforce. But I think that's still a difficult call, even though there are jobs available. Many don't have childcare for their children. Schools are closed. Most of our caregivers across the country are working moms, oftentimes single moms. So having the desire to want to serve and take care of our most vulnerable, but at the same time having their own children to deal with. I know round 4, there's some, language being introduced in terms of Heroes Fund. I think that's absolutely critical that we're thinking about our frontline healthcare workers. Right now, that language is limited to only those that are billing the federal, state, local, or tribal governments, and we think that needs to be expanded to anyone who's keeping the at-risk population from overtaxing a health system and keeping them safe and reducing the number of at-risk. And so we'll be looking for that in our engagement with our members of Congress for round 4.
Just quickly here, Shelley, I'm wondering, are you finding that you're having to increase the salaries of individuals in order to entice them back?
Now absolutely, and we have done that and rolled out that capability to our franchisees probably about 3 weeks ago to be adding kind of an incentive type of pay. I think we've called it kind of a safety pay for our caregivers to encourage them to come back when we do know that their at-home costs are higher in terms of having to arrange for childcare that schools are not able to provide today, and wanting to be cognizant of that. And even though, the industry kind of banded together and was successful in getting an exemption for FFCRA, at the same time that Saturday night we, did declare victory with our franchisees. The immediate communication from me to the franchisees was just because we don't have to pay it doesn't mean we shouldn't. If any of our caregivers are symptomatic, not feeling well or have contracted the virus, we should still make sure they're not having to worry about where their next meal is going to come from and how their families are going to be taken care of. So we have stood by that position as a brand, and at the local level by our franchisees as well. So I think we're trying to balance the right things. We have a vulnerable population we need to be able to take care of, and FFCRA exemption was critical for us to be able to do that. But at the same time, we want to make sure our workers are well protected and we can recruit the numbers necessary. That's going to become a challenge as more people want to pivot and stay at home. So we're looking for any and all ideas to do that.
Shelley Sun, thank you so much for joining us. Shelley is the CEO and founder of Bright Star Care, talking about the in-home care market, which is facing unprecedented demand as the population deals with the coronavirus. But very interesting to get her perspective on in-home health care. This is Bloomberg.
This is a Bloomberg Money Minute. Stocks are higher. Congress is preparing to hand out nearly $500 billion to small business. The Treasury Department released new guidance for the next round of funding for the Small Business Relief Program that emphasizes companies must certify the request as necessary to limit large firms. Meantime, more bad news on the job market. 4.43 million people in the United States filed for unemployment benefits last week. That suggests an April jobless rate of potentially around 20%. 6 coronavirus vaccines are now in the human trial stage. Half of those trials are being conducted in China. That's according to the World Health Organization. In all, there are 83 vaccines in some stage of development. And Netflix is looking to borrow another $1 billion to fund content acquisitions and production. Netflix is coming off its best quarter yet for subscriber growth as people who are housebound spend more time watching streaming services. Courtney Donahoe, Bloomberg Radio.
Not completing high school is more of a social thing than it was an academic thing. Even though all these years have passed, I still had that longing to have my diploma.
At age 30, Carissa finished her high school diploma.
If you're even considering getting your high school diploma, you can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education vocation classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
The Bloomberg Business of Sports podcast. How did the Yankees become this mega valuable team? Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry. Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple. Are you interested in a challenge?
The garden tools that mean you can grow your own. The fire pit that turns tea time into an alfresco dining experience. The paddling pool that turns your back garden into a water park. With a choice of ways to pay, you can make the most of family time. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided. Subject to status by Shop Direct Finance Company Limited. 18+.
We've never been further apart, yet somehow never closer. At Barclays, we think it's important to celebrate the people making a difference and help support those affected during these extraordinary times. That's why we're supporting the Big Night In appeal. We've kickstarted our donation with £1 million. And if you're a Barclays customer, we'll match your donation pound for pound, up to a total of another £1 million. So if you can, please join Barclays and donate at barclays.co.uk. All donations will be split between the registered charities.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn. Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search classic Game Replays to start listening.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip 3, have a game night. In fact, why not make it a game day? Whether you're quarantined with kids or roommates, nothing passes the time like a game of cards, Pictionary, charades, dominoes, or Never Have I Ever. If you've got the hardware, break out the video game console and enjoy hours of guilt-free gaming. For more indoor inspiration, search Listen From Home on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raise Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we'll square the dismal economic data with the optimism that we're seeing in markets with our own Barry Ritholtz, who is a Bloomberg opinion columnist as well as founder of Ritholtz Wealth Management. Plus, we're going to hear from Andrew Cuomo, governor of New York, with the latest daily briefing on the state of the coronavirus in the region. Right now, let's head over to Greg Jarrett for a Bloomberg Business Flash. Greg.
Lisa, stocks are staying in the green. Investors are looking past the bleak jobs news, and oil prices continue their comeback. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is up 1.25%, up 34. The Dow's up 1.3%, up 317. And the NASDAQ is up 1.3%, up 110. The 10-year is up 3/30 seconds. The yield is currently 0.60%. West Texas Intermediate crude is up 30%. That's now at $17.84 a barrel. COMEX gold is up 1% at $17.5580 an ounce. The dollar yen 107.68. The euro $1.829. The British pound $1.2383. More than 4 million Americans did apply for unemployment benefits last week, bringing the 5-week total during the pandemic to 26.5 million, and the steepest downturn for the U.S. labor market since the Great Depression. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
We are awaiting the daily press briefing from New York State Governor Andrew Cuomo. We will bring that to you in just moments when we get it. Let's talk markets right here, and there's nobody better to do that with than our good friend Barry Ritholtz. He's a Bloomberg opinion columnist and host of Masters in Business on Bloomberg Radio. He's also the founder, chairman, and chief investment officer of Ritholtz Wealth Management, so he wears a lot of hats. So, Barry, as we take a look at this little snapback in the green here today, how do you square that with, another very sobering jobless claims number of 4.4 million?
Yeah, everybody looks at the weekly jobless numbers as if it's breaking news. And the reality is that really is an amalgam of all 50 states, the data they released during the prior 7 days. By the time the BLS releases this data, by the time the federal government releases the national data, anyone who wanted to assemble that by a state-by-state basis could have done it. So it's kind of old news. I know that sounds silly because everybody waits with bated breath, but you can really reverse engineer that pretty easily a couple of days earlier. Plus, is anybody surprised by this data at all? We've watched 22 million people file for unemployment for the previous month. Nothing has changed. We're still under lockdown. People are still having a hard time getting through to their state unemployment office, so we know the numbers are probably undercounted because of that challenge. As long as we're under lockdown, maybe this starts to flatten out to 4 or 3 or 2 million a week, but we're somewhere between 20 and 30% of the people who had a paying full-time job in March no longer do, and that's a huge number with enormous economic ramifications.
Yeah, I was just looking at a Pew survey that shows that about 43% of U.S. adults say that someone in their household has lost a job or taken a pay cut due to the outbreak. I'm just trying to extrapolate this out as we pair this dismal data with the optimism in markets as to what exactly people are looking to. Is this a bet on the Federal Reserve and U.S. government that they will pump enough money into markets to inflate asset prices and perhaps give a little bit of a lifeline to enough of the population to enable a recovery in fairly short order?
I think it's a couple of different factors depending on your time frame. If you're a short-term trader, you look at a market that falls 35%. That in 4 weeks, that creates a tremendously oversold condition. Once the rubber band gets too stretched too far in one direction, we've seen it time and again. It tends to snap back, at least partway, on a temporary basis. No markets go in a straight line. Every bull market has counter trends, downtrends that punctuate it, just like every bear market has these vicious rallies that move in the opposite direction. So that's just a short-term basis. The longer-term perspective is we don't think this is going to last forever. We do see signs that we are either at or near the peak, if not past it for New York. Other states are still on the upswing, but there's a little bit of light at the end of the tunnel. We just don't know if it's daylight or an oncoming train, which is why we haven't recovered fully.
So it's interesting, Barry. You probably put me in a more cautious stance as it relates to the duration of these lockdowns and quarantines and potentially reopening the economy, if you will. So with that backdrop, is this a market that might be just bouncing along for a number of months and or quarters until we really get that definitive view of, okay, we've got the testing, or we've got some antibodies, or we're closer to that vaccine? Is this something that just says this is going to hold this market in check?
Well, nobody knows if it's late 20 or 21 or early 22 that you could check off all the boxes. Here's the full testing. Here's the contact tracing. Here's the antibody protocol that will allow people who don't have it to at least develop some form of immunity, whether it's full or partial. We don't know. We don't know about the protocols and therapies that turn this from a potentially fatal disease to a manageable disease. Look at things like AIDS. You never get cured of AIDS, but it becomes there's a therapeutic that manages it. So whether that's 6 months or a year or 2 years, the market doesn't say, okay, the economy is going to halt and we're going to go to zero. It's trying to balance between the short-term drop of earnings and revenue and what were the forecasts for 2019? $175 on the S&P? Yeah. Maybe that drops to, pick a number, $100? We're all spitballing when we're trying to come up with revenue and profit projections for 2020. Right. But I think we're all pretty confident that by 2021, certainly 2022, those numbers come back. Now there's a longer debate to be had about profit margins and leverage and how freely and inexpensively capital has been and debt has been extended, and what might happen with the corporate tax rate post-election. That's a whole different conversation. But I think the market is saying...
You know what, Barry? We got to leave it there. I'm so sorry to say. Barry Ritholtz of Ritholtz Wealth Management, as well as a Bloomberg opinion columnist, speaking with us right now. Andrew Cuomo, governor of New York State, taking the podium to give his daily press briefing on the coronavirus. Let's listen in.
What I hope, just facts. And the reason I do that is because everything we're doing is basically voluntary on behalf of people, right? State government, local government, federal government doesn't have the power to enforce stay-at-home orders. If 19 million people said, I'm going out today, they would go out. But the belief was if they have the facts, if they understand the facts, they'll act prudently in connection with the facts. Now, some of the facts have been disturbing. Some of the facts have been ugly. But those are the facts. And that's my job, is to present the facts as facts. If I have an editorial comment on the facts, I give it to you. But I want you to know that's my editorial comment versus what data or science will say. Also, our Muslim brothers and sisters begin the observation of Ramadan this evening, and we wish them all the best. The hospitalization rate is down again, so that is good news. The overall, if you project the curve, everybody's looking at curves nowadays. If you look at the curve continues to go down. And that's also in the total hospitalization number. Bounces up and down a little bit, but it's clearly down. Number of intubations bounces a little bit, but it's also clearly down. The number of new COVID cases walking in the door or being diagnosed is relatively flat. That is not great news. We'd like to see that going down, but it's not going up either. Number of lives lost is still breathtakingly tragic, 438. That number is not coming down as fast as we would like to see that number come down. And what we're looking at this point is, okay, we're on the downside of the curve. The numbers are trending down. Do they continue to trend down, or do they pop back up? If they continue to trend down, how fast is the decline, and how low will the decline go? In other words, if 1,300 people, or about that number, keep walking in the door, then you're going to have a hospitalization rate proportionate with the number of people walking in the door. So we want to see the number of people walking in the door reduced, the number of new infections reduced, so we hit a low plateau, if you will, but we don't know what that is, and we don't know when it is. And if you look at the number of incoming cases, it's been remarkably flat for the past several days. So that's the best indicator of how containment is working and how the close down policies are working. And over the past few days, we basically flattened at 1,300 new cases a day, which is not great. We'd like to see those new cases reducing even more, and we'd like to see them reducing faster. You then have other long-term questions. Is there a second wave of the virus? We talk about the 1918 pandemic. It came in 3 waves. Is there a second wave? Does the virus mutate and come back? The federal officials are starting to talk about the fall and potential issues in the fall. They're worried about the virus waning somewhat during the summer. Remember, there was talk, will it go away when the weather gets warm? No one's really saying it will go away when the weather gets warm in the summer, but there's still a theory that the virus could slow during the summer, but then come back in the fall. If it comes back in the fall, then it comes back with a normal flu season. That's then problematic because you are then, quote unquote, testing for the flu and you're testing for COVID on top of all the other tests you do. That could be a possible overwhelming of the testing system. If people could have the flu or could have COVID in the fall and they don't know which it is, they could get nervous and start going into the healthcare system, which could then bring back a capacity issue in the healthcare system. So that's something we have to worry about and watch. Nursing homes, they are our top priority. They have been from day one. Remember how the nursing home system works. They are private facilities. They get paid to provide a service. They get regulated by the state government. There are certain rules and regulations that they must follow, and we put in additional rules and regulations on nursing homes in the midst of this crisis. Staff must have appropriate PPE. They must have their temperatures checked before they come into the facility. There are no visitors who are coming into the facility, which is a tremendous hardship, but it's necessary to protect public health. If they have a COVID positive person in the facility, that person has to be in quarantine. They have to have separate staff for the COVID residents versus the non-COVID residents. If they can't care for the person in the facility, they have to transfer the person to another facility. The nursing home is responsible for providing appropriate care. If they cannot provide that care, then they have to transfer the person to another facility. They have to notify residents and family members within 24 hours if any resident tests positive for COVID, or if any resident suffers a COVID-related death. That is a regulation that they have to follow. And they have to readmit COVID-positive residents, but only if they have the ability to provide the adequate level of care under Department of Health and CDC guidelines. If they do not have the ability to provide the appropriate level of care, then they have to transfer that patient. Or they call the Department of Health, and the Department of Health will transfer that patient, right? But that is how the relationship works. The state has very strict guidelines on privately run facilities. they get paid to take care of a resident. That resident, that patient must have a state-directed level of care. If they cannot provide that, they can't have the resident in their facility, period. Those are the rules. We're going to undertake an investigation of nursing homes now to make sure they're following the rules. It's going to be a joint Department of Health and Attorney General investigation. But those are the rules. They get paid to take care of a resident, and they have to do it in accordance with state rules. And if they don't, we will take appropriate action. And the State Department of Health and the Attorney General are going to be commencing an investigation to make sure all those policies are in place and being followed. If they're not being followed, they can be subjected to a fine or they can lose their license. It's that simple. Testing is going to be a major operation that happens from now until the situation is over. It's new, it's technical, it's complex, it's a political football, but testing does a number of things for us. Number one, it reduces the spread of the virus by finding people who are positive, tracing their contacts, and isolating them. That's a function of testing. Testing also, what they call antibody testing, you test people to find out if they have the antibodies. Why? Because if they have the antibodies, they can donate blood for convalescent plasma, which is one of the therapeutic treatments. So you want to find people who had it so you can identify them to donate for convalescent plasma. The testing also can tell you the infection rate in the population, where it's higher, where it's lower, to inform you on a reopening strategy. And then when you start reopening, you can watch that infection rate to see if it's going up. And if it's going up, slow down on the reopening strategy. Okay, so there are different forms of testing for different purposes. All of them are important. It was vital for any state, I believe, to first get a baseline study of where you are on the infection rate. All we know to date is the hospitalization rate. How many people are coming into hospitals? That is all we have been tracking. That's all we know. And then from that, you've had all sorts of anecdotal extrapolations on the hospitalization rate, saying, I think the infection rate is this, I think the infection rate is that. I said, I want to have the infection rate. So we have undertaken the largest, most comprehensive study of New York State to find out what is the infection rate. And that we started a few days ago. Sample size so far of 3,000 people statewide. Let's find out what the infection rate is. We have preliminary data on phase one, and this is going to be ongoing. We did about 3,000 tests. We're going to continue this testing on a rolling basis. We'll have a larger and larger sample. But I want to see snapshots of what is happening with that rate. Is it going up? Is it flat? Is it going down? And it can really give us data to make decisions. We did 3,000 surveys in about 19 counties, 40 localities across the state. The surveys were collected at grocery stores, box stores, etc. And that's important. It means you're testing people who, by definition, are out of the home and not at work. Okay? What does that mean? I don't know, but that has to be a factor that's taken into consideration. These are people who were out and about shopping. They were not people who were in their home. They are not people who were isolated. They're not people who were quarantined, who you could argue probably had a lower rate of infection because they wouldn't come out of the house. These are people who were outside. These are people who are not at work, so they're probably not essential workers, okay? So that has to be calibrated. But what we found so far is the statewide number is 13.9% tested positive for having the antibodies. What does that mean? It means these are people who were infected and who developed the antibodies to fight the infection. So they were infected 3 weeks ago, right? 4 weeks ago, 5 weeks ago, 6 weeks ago, but they had the virus, they developed the antibodies, and they are now, quote unquote, recovered. 13.9%, just about 14%. Breakdown male, female. Female, 12% positive. Males close to 16%, 15.9% positive. Regionally, Long Island at 16.7, New York City at 21.2, Westchester, Rockland 11.7, and rest of state 3.6. This basically quantifies what we've been seeing anecdotally and what we have known, but it puts numbers to it. Rest of the state is basically upstate New York, 3.6. It was been about 7-8% of the cases that we've had in the state. Westchester, Rockland, we had an initial significant problem. Remember, Westchester had the largest, hottest cluster in the country at one time. 11%, so it's literally somewhere in between. New York City, 21, which again supports what we knew anecdotally. Long Island, 16.7, so it's not that far behind New York City, and it is significantly worse than Westchester, Rockland. We've been talking about Westchester, Rockland, and Nassau, Suffolk basically is 1, but there is a variation with the Long Island numbers. By race, Asians, about 11.7%, African American, 22%, Latino, Hispanic, 22%, multi, none other, 22%, white, 9.1%. This reflects more the regional breakdown. African American and Latinos are, in this survey, disproportionately from New York City. And New York City is at 21%. So the African American number, Latino number is 22%. But, and the upstate whites, they're talking about more upstate, which is 9, but it's 3.6 in the survey. By age, nothing extraordinary here. We did not survey anyone under 18. So it starts with 18 years old. 18 to 24, 8%. 45 to 54, 16. 75 plus, 13. But it's a small percent of the total. Again, how many 75-year-olds were out shopping and about? That is the group that's supposed to be isolating because they are the most vulnerable, 65 to 74 also. But that's the distribution.
We've been listening to New York State Governor Andrew Cuomo with his daily press briefing, and a lot more numbers today, Lisa, from the governor in terms of antibody testing as well as infection rates in different parts of the state. I think the overall trend is that the trend in the numbers, Lisa, continues to be positive, but concerned about kind of plateauing at this level. We need to see the numbers go down even more.
Yeah, and he talked about testing being a political football and why he would like to have such prevalent testing, basically to understand and calibrate the reopening based on whether there's an increase or decrease in potential cases. Again, the testing in the forefront, and yet we don't necessarily have the required testing kits to move forward on that.
No, we don't. And to the end, there are certainly many kind of observers that are looking for the federal government to take the lead here, given that it really will need to be a national testing and even a global testing. But it's really been right now up to the states to kind of manage their process. And so therefore you have a little bit of a differential in terms of how this testing will take place. But clearly that will be key going forward here. So just looking at the market, Lisa, we have still up about 1% on the S&P, up 28 points. The Dow up about 280 points, 23,752. Coming up, Balance of Power with David Weston. He will drive the conversation forward alongside my colleague and co-host Lisa Abramowitz. I'm Paul Sweeney, and this is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings. Sometimes the simplest method is the...
Hey, it's Jacoby here from Jalen and Jacoby. And after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen and Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our after show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn. The NHL is always on the ice with these awesome hockey podcasts on TuneIn. Get your goal with the Spittin' Chicklets podcast.
Brian Yandel, Keith Yandel, thanks for coming on. What's going on?
Nothing much. Glad to be here. You guys got some nice digs here.
We heard you took Southwest 2-stop flight to get out here.
Yeah, well, just...
Carve up the ice with NHL at the rink.
The other day, I wrote a story. Artemi Panarin, Semyon Varlamov, Sergei Bobrovsky, they all helped arrange for the purchase of N95 masks to benefit hospitals in their respective markets. This is another one of those positive stories you're seeing.
Or create your own power play with Locked On NHL.
All these teams invested future assets to take a run at the Stanley Cup right now. Like, all of those teams would have a real serious gripe, like trading these multiple first-round picks to make a run at a cup. You're right.
Discover these and more NHL podcasts right here on TuneIn.
I'm Mel Kiper Jr., and to get you ready for the NFL Draft, you can listen to my podcast, First Draft, as Todd McShay, Chris Sproul, and I highlight all the top picks and give you the analysis you need leading up to the draft. Just search ESPN Radio today.
Today at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From New York to our Bloomberg television and radio audiences worldwide, this is Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to start today with the state of the economy. We got jobless claims numbers out today for the United States, indicating just how many Americans now are out of work. And we turn now to Michael McKee. He's our chief international policy and economics reporter for Bloomberg. So, Michael, it was 4.4 more or less million Americans out, 26 million in 4 weeks, and yet some people thought that was actually sort of better than it might have been.
It is amazing, David. 6 weeks ago, we were talking about jobless claims of about 216,000, and now we're talking about 4.4 million, and it seems like good news because we had 7 million for a couple of weeks in a row. It's just astounding. And with the number of jobs, people filing for jobless claims, economists crunching the numbers, and we're looking at somewhere around 22 to 23% for an unemployment rate when we get those numbers on May 8th, and that compares compares with the high in the Great Depression, 1933, 24.9%. We could easily be above that. This week was the week that is the reference week for the jobs report. So it may not be worse than that. But, I mean, when you're grasping at straws for good news, global PMIs, the United States comes in better than Europe, with numbers that would have been astounding to anybody a month ago. 36.9 for manufacturing, 27 for services, the composite 27. And those are so much higher than Europe. In France, the composite 11.2, the Eurozone 13.5. You can't model the destruction of the economy with numbers that low because it's never been done before. We've never seen numbers that low. But the European Central Bank Chief, Christine Lagarde, today suggested we could see 15% collapse in the European economy for the quarter. So the numbers that we're talking about are just absolutely astounding at this point. Now, those numbers that you're seeing there are quarterly numbers. They're not on an annualized basis as we do in the United States. In the United States, we're looking at numbers like 30 to 40% because we project it out over the course of a year, David.
So, Mike, as you say, the numbers are just astounding wherever you turn, the United States or Europe. How much can we rely on the numbers? Because I've seen some reports, for example, in the United States with respect to jobless claims, there's such an influx of people filing that some states can't keep up with it, and they're actually estimating. They may not be actual numbers for some states, such as, for example, Connecticut.
That's why they think that we're going to see these kinds of numbers, the multi-million numbers of jobless claims filed, for several weeks to come, because states have to work through the backlogs. We also have the issue of companies that have been trying to hang on with people on the payroll. Do they fall off if those companies decide to give it up? So we may see these numbers for quite some time, and that makes it hard to calculate what the overall impact is going to be. The other question is, how long does it last? When do people start to go back to work, and do we see the Paycheck Protection Program lure some people off of unemployment and onto payrolls again? Very hard to guess what all this means, especially since the models never took anything like this into account.
Yeah, models were not designed for this sort of phenomenon. Go back to Europe for a second that you mentioned with the PMIs and also Madame Lagarde's remarks about the GDP. Did those PMI numbers indicate anything about differences among countries? For example, Germany versus France.
It shows that Germany was a little bit stronger, but that everybody has been affected. When you look at the German numbers, of course, the manufacturing powerhouse there, their manufacturing number 34.4 is not that far above France at 31.5. And those numbers seem a lot stronger than the service numbers. But that's because they count supplier delivery times lengthening as good news. Usually it means that you can't get the parts because there's so much demand. Now there's no demand at all. So there's no parts coming in, so supplier delivery times are infinite, and that means the numbers are a little bit higher than they even should be. But the southern nations, which aren't represented in specific numbers today, but the overall European number suggests that they're growing really, really slowly. That's of course going to be the big issue for the Eurogroup meeting this afternoon as the leaders of the Eurozone try to figure out how to bail out those countries, how to keep their heads above water.
An extraordinary story. Thank you so much for telling it. That's Mike McKee, our colleague at Bloomberg. And now, for Bloomberg First Word News, we go to Mark Crumpton.
Thank you. As you and Michael were just referencing, the numbers are staggering. In the last 5 weeks, 26.5 million Americans have filed for unemployment benefits. Last week's total was 4.4 million. If everyone who asked for benefits is counted as unemployed, that could mean an April jobless rate of about 20%. Stay with Bloomberg. We'll continue to follow this story throughout the day. 100 meat inspectors at the U.S. Department of Agriculture have tested positive for the coronavirus as the illness ravages the nation's meat processing plants. The infections add to the growing concerns about the safety and the viability of the nation's meat supply after several major U.S. factories closed in recent weeks due to the outbreaks. France says it will lift its coronavirus lockdown countrywide on a case-by-case basis rather than region by region. The government is working on a detailed plan to lift restrictions progressively on non-essential travel and revive its economy from May 11th, following weeks of confinement to prevent the coronavirus from spreading. The virus has killed more than 20,000 people in France. Global news 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Well, the world of investing and investment banking has changed, maybe forever. We're going to talk to the man who is right in the center of all of it. He is Ralph Schlosstein, who runs Evercore. That's coming up next. This is Balance of Power on Bloomberg Television and on radio.
Market upheavals.
The narrative is a social distancing tip.
Keeping your distance from others is important in slowing the spread of coronavirus. So here are some fun things to do alone. Read a book, take a walk, unpack your suitcase from that trip you took last September, paint a self-portrait, catch up on a TV series, do a puzzle. Remember, we should all stay home to lower the risk for everyone. For more info, visit coronavirus.gov.
Let's all do our part, because we're all #alone together. Brought to you by the Ad Council.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk, radio, and podcasts, along with important breaking news updates.
Hey, it's Jacoby here from Jalen Jacoby, and after you watch The Last Dance on ESPN, which you're obviously going to do just like the rest of us, stuck in our homes in quarantine, you can join Jalen Rose and I for Jalen Jacoby, The After Show. And we will be joined by the director of the documentary series, Jason Eyre, to discuss each episode in detail. You can hear our After Show right here on ESPN Radio on Sunday nights after the episodes air, and they'll be available on the Jalen and Jacoby podcast feed.
Search Jalen and Jacoby to listen today.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind, giving up. I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The 2020 NFL Draft is on TuneIn.
With the New York Jets, that's going to be the hot spot for this draft early on, right? We're going to see if a team's going to try and get up into that spot and see if they want to...
Tonight at 8 p.m. Eastern, TuneIn has you covered with live coverage, discussions, and analysis of every round one selection.
Oliver is the only guy in this draft that has Aaron Donald potential. Who's going to get up and take it?
Be there when the future stars of the NFL find their home, and when your team selects the players that will shape their future for seasons to come. Search NFL Draft to listen. With the NHL season temporarily on ice, now is a good time to catch up on past games.
Bergeron, he scores!
With game replay on TuneIn, you can listen to every power play, slap shot, and goal of the 2019-2020 season so far.
Suter to Cunnin to Fiala, he scores!
And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
Brian Windhorst and the Hoop Collective Podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer. Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen.
Areas across the state to expand their daily testing capacity. The command center also recently sent 3,500 swabs and tubes to South Coast Health Systems, who will increase their daily testing capacity by 400 tests a day, and also sent 3,500 swabs to the Cambridge Health Alliance. With respect to hospitalizations and hospital capacity, which I know is an important issue for all of us, the command center is communicating daily with the hospitals across the Commonwealth, as well as with medical professionals, to monitor the capacity in our system. As of yesterday, there were 3,977 patients hospitalized statewide for COVID-19, and that includes a little over 100 new hospitalizations. In total, 9% of the total number of COVID-19 cases are currently hospitalized, a number that's remained relatively stable over the past few days. Out of 18,000 available hospital beds statewide, ranging from ICU beds to field hospital beds, over half are empty and available for patients. These numbers mean that we continue to see a slight increase in the number of people needing medical attention due to COVID-19, but they also show that our healthcare system planned well and is managing through this crisis. That's good news. As we know, Massachusetts is the home to one of the strongest healthcare systems in the world. From our academic medical centers to our terrific regional and community hospitals across the Commonwealth, these healthcare facilities have been well positioned to help us withstand the surge. We also planned for this. The command center worked with the healthcare community to model what this uptick in cases would look like, and then we built a plan and we've been executing on it. We've worked with our academic medical centers, our community hospitals, and our medical teams to craft a plan that is flexible enough to dramatically increase ICU capacity, dramatically increase bed capacity, and at the same time create step-down capacity so that patients who didn't need to be at an acute level anymore could be moved to a lower level setting. All in all, this process has given us the structure and the flexibility and the capacity that we need here in Massachusetts to work our way through the surge. It also means our hospitals are well positioned to deal with and take care of the other elements of care that are so fundamental to the work that they do every day. And to some extent, that's part of what we want to talk about today. Many hospitals have reported a reduction in patients seeking care for other serious medical conditions, like heart problems, dialysis treatments, and cancer treatments. We know these medical conditions didn't stop when COVID-19 picked up. And our hospitals and our healthcare providers have made accommodations for COVID-19 to ensure that they can also care for the other healthcare problems that they come across every day and do it safely. The purpose of all that surge planning and response was to ensure that our healthcare system would not be overrun and could continue to respond to other emergency needs. People should still call their doctor to talk about their health needs and go to the hospital if they have an emergency. People have worked hard to set up telehealth services, which they've been using to help people talk to clinicians distantly using either video chats or phone conversations to determine whether or not, in fact, they need to be physically seen by somebody. We've also added the Buoy Health System, which has tracked over 85,000 connections so far with people who've used it for self-diagnostic purposes. And if people, based on their data and their submissions, needed to speak directly to a clinician, that's been made possible. And of course, call 911 in an emergency to get to a hospital if you need immediate help. We don't want people getting sicker or exacerbating an illness or an injury, and it's important that people are cared for when they're sick, whether that's for COVID-19 or for something else. Just a few days ago, as part of the regular calls we have every day with hospital CEOs, we discussed this concern over patients delaying life-saving treatment out of fear. And I asked the CEOs to do what they could to get the word out. Many of our facilities have worked together like never before since the beginning of this pandemic, sharing innovative solutions and essential equipment. And the Commonwealth and its people have benefited tremendously from this collaborative approach. And having been involved in the healthcare world for much of my professional career, I can tell you that these hospitals and these organizations are typically, well, pretty competitive with one another. And it's been remarkable to see them work together to make sure that they, you, and we have the capacity and the ability to serve both those who are dealing with COVID-19 and those who are dealing with the other issues in medicine that are much more traditional to what they see every day. And it's terrific that the 6 Boston teaching hospitals participated in a series of TV public service announcements asking residents not to delay care. I want to thank Tufts Medical Center for taking the lead on the project and local video production company Last Minute Productions for donating their time. The 60 and 30-minute PSAs will be played on all Boston TV stations starting today. I want you folks to take a look at the video, and then after it plays, I want to ask Dr. Michael Apkon, who's the CEO of Tufts Medical Center, to come to the podium and share a few thoughts.
This is a special report from Bloomberg Radio. You have been listening to Governor Charlie Baker of Massachusetts with the latest COVID-19 update from the Commonwealth. The governor is saying once again, as he did yesterday, that they want to wait this out and that they are trying better to inform the public of what to do. Again, this has been a special report on Bloomberg Radio. Now we return to Balance of Power with David Weston.
To behave normally. It relies on a reasonably stable and well-valued stock market. It relies on high availability of credit. It relies on a reasonable judgment or sense of where the economy is going, and it relies on CEO confidence. The last 3 are not present right now. There's not readily available credit. We have no idea how the economy is going to evolve over the next 6 to 12 months. And as a consequence, CEO confidence is low. So our largest business, M&A, is clearly going to be quite negatively affected. The good news for us is that we've invested heavily in businesses that help where we can advise companies on their balance sheets, either in restructuring or advising them on debt or on equity capital raising. And so we're very busy, even though we're spread out among 1,800 offices around the globe. But the businesses that I just described aren't big enough for us to offset what will be a pretty significant decline in M&A activity for sure.
Ralph, if you look out, if you can, over the next 12, 18 months, do you expect that you will grow much more in things like advising on workouts, in restructurings, in dispositions, which one would think would grow to make up for at least a good part of the M&A? Do you have the opportunity to grow into that part of the business?
Yeah, those parts of our business are going more than flat out, and we're actually repurposing some of our bankers to become restructuring bankers and financing bankers because it's the same set of skills in many circumstances. So no question, those parts of our business are going flat out. They will grow very rapidly over the next 12 to 18 months. But as I said, they're not the same size as our M&A business. So overall, it's hard for them to make up for what will be an inevitable decline in M&A. But by the way, if we do get a reasonably rapid recovery and some settling down, it's quite possible that M&A activity will pick up again, 6 to 9 months from now. It will just require some visibility about the direction of the economy and settling down of markets before that happens. We still have lots of active dialogue with our clients because there are many things that they still want to do. It's just, everybody is reluctant. That old phrase, you don't want to catch a falling knife.
Do you expect that there will be as many bankers at Evercore and more broadly in investment banking 2 years from now as there was, again, 1 year ago?
I do, actually. My guess is 2 or 3 years from now we'll have more than we have today, because we've consistently taken market share. Our business model of independent advice without any conflicts with our clients hugely resonates with both large and small and medium-sized mid-cap companies. So even this last quarter, we once again gained market share in the advisory business. Our advisory revenues were up 10%, and the average of the 5 large U.S. firms, Goldman Sachs, JP Morgan, Morgan Stanley, B of A, and Citi, was down 13%. So we're taking share, and in order to continue to take share, our only input to our revenues is people, and so we will continue to grow.
And finally, Ralph, what about sectors? Do you see a difference in sectors among the companies you deal with? For example, right now, it seems like telecom is more needed than ever. Online is needed more than ever. Certainly, the tech sector seems to be rising. Do you see, as you deal with your clients, that there's more openness, more confidence, more opportunity there than perhaps in some other more traditional areas, such as manufacturing, materials, things like that?
Well, there are going to be a massive number of changes in our in lots of sectors as a result of this. Number one, we're all learning that we can be highly productive without being all in the same place. That has implications for center city real estate. It has implications for, in my view, family leave policies. So in the service sectors, these are going to be very meaningful changes, in my view. In manufacturing, you're already seeing rethinking of supply chains. Do I really want to have one supplier for a critical part to my manufacturing process that comes from an area that could be affected by a pandemic? So I think there are going to be massive changes. Clearly, technology is inevitably going to be a continuing growing proportion of the S&P 500, in my view.
Right. Okay, Ralph, thank you very much. I'm afraid we have to leave it there. That's Ralph Schlosstein. He's president and CEO of Evercore. And this is Bloomberg.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know, because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Melissa from Michigan. I work an extra part-time job serving lunch at my child's school, but I still can't afford to put food on our table.
Daniel from California. Choosing whether to pay the rent or pay to fix the car to get to work doesn't leave us with much at all. Now we can't even pay for meals.
Hunger is a story we can end. End it at feedingamerica.org. Brought to you by Feeding America and the Ad Council.
Whether it's another day of market misery, pandemic emergency, or both, one thing will still go right.
We have the latest world and national news.
Karen Moscow and Nathan Hager bring you the most accurate coverage.
The White House is looking for additional ways to support the economy.
Bloomberg Daybreak.
We continue to watch equities around the world.
Weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is time now for our Stock of the Hour, and as Las Vegas stands up nicely on some speculation about reopening some economies. And Kaylee Lyons, she's here with all the news.
Yep, David, Las Vegas stands is up more than 11% today. Now, it did report first quarter results that were by no means pretty. Revenue fell 50% in the quarter, but that was better than analysts anticipated. A lot of the weakness has been in Macau, 95% drop in visitors in Macau over the course of the COVID-19 lockdown. That is a big chunk of their business, and of course that weighed in the first quarter. The optimism today, though, coming in the fact that Las Vegas Sands sees a rebound coming in the summer as China lifts those travel restrictions and all that pent-up demand comes flooding back. Now, of course, JP Morgan, for example, upgraded the stock today. A lot of analysts agree with that idea that things are going to turn around in that major market. You're seeing stocks the likes of Wynn Resorts, which also gets more than half its revenue from Macau, also rallying today. So a lot of optimism in the casino space as we do look to see these economies reopening. Now we turn from Macau to Las Vegas. Of course, Las Vegas also a crucial market for many of these companies, and Las Vegas has yet to reopen. Much more coming up next. This is Bloomberg.
This is a Bloomberg Money Minute. U.S. stocks are posting gains. The Dow is up 309 points, NASDAQ climbing 97, S&P 500 up 32 points. West Texas Intermediate crude is up over $17 a barrel. Well, COVID-19 continues to grip the economy. 4.4 million Americans applied for unemployment benefits last week. That brings the 5-week total during the pandemic to 26.5 million. Economists are telling us that those numbers suggest the unemployment rate this month is topping 20%. In earnings, drug maker Eli Lilly didn't suffer as sales of its blockbuster diabetes drug Trulicity helped revenue jump 15%. And being a retailer for essential goods during the pandemic is boosting sales for Target. The discount chain is on pace for same-store sales growth of 7% in the first quarter. Donna Wilson, Bloomberg Radio.
25 years ago, NJIT graduate Dick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
My mother was always very active and independent, and she was familiar with her neighborhood. But one day, she stopped at the stop sign for much longer than usual. She wasn't even really sure where she was at.
It's important for you to talk to someone about it. I felt so much better after my son told me, Mom, we'll figure it out.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
In these times of loss and crisis, the people you trust to ask the questions you need answered become even more vital.
Should the president, though, impose the Defense Production Act?
Carol Masser and Jason Kelly.
Help us understand what we know so far.
Bloomberg Business Week.
They are on the front line of the impact of the coronavirus.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Welcome back to Balance of Power on Bloomberg Television and Radio. I'm David Weston. The global economy is reeling from what's going on in response to that pandemic. At the same time, equity markets aren't reacting quite the way you might expect them to. Welcome now Catherine Mann. She is the chief global economist for Citi. Before that, she also served in the Council of Economic Advisors at the White House and was chief economist at the OECD. So, Catherine, thank you so very much for being with us. Really appreciate it. And let me pick up on exactly that point. Obviously, the economic numbers are terrible. We saw more unemployment today. The PMIs out of Europe are terrible, and we probably haven't seen the worst of it yet. At the same time, equity markets, while down, are not down as much as one might think. Are the equity markets right that are properly assessing what the government's willing to do to save the economy, or are they underestimating the risk?
Well, it's really good to be with you, David. So I think that we can definitely see that if we go back a little bit of it, a couple months or so, the markets were in free fall. The markets were absolutely in free fall until the Fed came in with its program, not the rate cuts, that didn't help, but with the first round of alphabets of backing, and then the markets still were on the bottom until the fiscal authorities came in with their huge program. So it's no question that the equity markets are responding to the combination, the double-barreled Fed and monetary policy, on fiscal policy. On the other hand, it's also the case that when we look at where they bounced back to, we sort of say, okay, they bounced back to where they were in the middle of 2019, maybe not to the highs of the beginning of 2020. Middle of 2019, where do we think the economy is going to be in 12 months? Are they looking forward to that? Because if they're looking forward to that, they shouldn't be where they are now.
And Catherine, one very interesting point that you've made is this. Everybody talks about, is it a V, is it a W, is it an L, is it a U, things like that. Your point, I believe, is it depends on where you look, and specifically at what sector. It may be a different letter for different sectors.
Yeah. So a couple things. First, different letters for different sectors, and it's also different letters depending on what your time horizon is. So let's talk about the sectors first. Something like a manufacturing, much more like a V shape, because, when the factory is shut down, you run down the inventories. When you have to ramp up production to make back up your inventories. Maybe not as much. We are tempering the V's a little bit because the supply chain continuity matters. Your factory may be open, but the next factory on the supply chain may be closed. So, you've got some tempering of the V shape in manufacturing through that relationship and the fact that the whole world is not opening up at the same time because the virus didn't arrive at the same time. The other set of sectors, though, for example, are ones where consumer choice matters. We call it getting back to play, meaning people are going out to entertainment, restaurants, sporting events, travel, tourism. Of course, people in those sectors they are the workers in those sectors. They're the employed people, but it matters whether or not there is consumer demand for those unstructured activities, things that you do by choice. Nobody's forcing you to go take a cruise. And so until that really gets back, those sectors, the workers associated with those sectors, and therefore the economy as a whole, is going to have a drag. It's going to be L-shaped for them. And so you get these very different shapes depending on the sector. You add it all up to an economy, and some of them are a little bit more V-shaped because there's a little bit more manufacturing, a little more tech maybe, and then other economies that might be South Korea or Taiwan. And then there are other economies that are extremely tourism dependent. Those are facing L's, something like a Thailand, Singapore, UK. These are economies very dependent on consumer choice sectors. The other perspective, though, that I think is important to remember is depending on what is your time horizon as an investor, if you are very kind of a near-term, short-term time horizon, you're going to see these just amazingly collapsing economies on a quarter-to-quarter basis. So into the second quarter for advanced economies for most of the emerging world, except for Asia, which is being changed by China. Tremendous deterioration. But then huge rebounds. in Q3, different for different parts of the world. So there's a lot of arbitrage in there from quarter to quarter. On the other hand, if you're kind of a long-term investor, you ask the question, when does the economy get back to the peak of economic activity as measured by, say, January 2020? How long does it take? Probably takes 12 to 18 months. It means for the economy as a whole, things are bad until you get to 2021, midway through 2021. So what does that mean to you as a corporation if I told you your revenues weren't going to be back to their peak for 18 months? You know, that's a pretty tough thing to be thinking about if you're a corporation.
It is indeed, Catherine. One of the remarkable things, certainly I never thought I'd see it in my lifetime, we saw this week, was oil, with futures contracts actually trading well into the negative numbers. Was that specifically about some of the technicalities of trading in oil and having to take delivery, or was it indicating something more broad? And specifically, does it raise the specter of deflation?
Good set of questions there. So the negative numbers are a combination of technicality and real things, meaning where are you going to put it, where are you going to store it. If you can't find a place to store it and you've got a contract and you don't want to take delivery, then you're going to have to sell that contract, and that's how you get to negative numbers. But of course, underpinning this is oversupply, you know, the price war and a lot of supply being generated by both Saudi Arabia and Russia, as well as a lot of other producers. That supply is out there on the high seas and is going to arrive at ports in another month or so. So even when the production cutbacks that were agreed to get implemented, there's still an awful lot of supply out there. There's also this question about whether or not the production cutbacks are going to be sufficiently significant enough to offset, which is a collapse in demand for product. So it's a combination of the politics and policies about oil, price war and so forth, and the production associated with that, collapsing demand, and then the technicality of there's no place to put it, and I don't want to take delivery, so I got to sell. So that's the technicality of it. If anything, the oil markets probably are giving us a better read on prospects for the global economy, at least with regard to travel, tourism, and those factors that are important drivers of oil demand and other related product demand. Whereas the equity markets are giving us a view of how policy is backstopping them. Different degrees of backstop.
Right. Catherine, finally, we're going to hear from the central banks again, with the Fed, for example, next week, and a series of other central banks. We've heard an awful lot from them already. They've done an awful lot to support the economy. Is there more to come? And if we essentially lapsed over to monetization of debt as a practical matter?
Well, the Fed has made it very clear that they feel like they have as many instruments as they need, depending on the situation. My guess is that I think they knew that there was going to be this degree of fallout associated with when you close down the services sector of your economy, and services, account for 70% of consumption, production, and employment. Not all services, shut down. Of course, yours didn't, and mine didn't, because here we are. But a good portion of the economy did. So they knew that was going to happen, and they didn't want to have the financial fallout associated with that real side fallout to precipitate and create a downward spiral associated with, a GFC 2.0. So they know the degree of the challenge. They still have a lot of opportunities to get involved in the various markets, the financial markets, bond markets, through basically everybody. You could call it a policy put on the entire portfolio, but that's exactly what had to happen in the near term. So they have what they need to do going forward. Whether they're going to come up with more programs, I doubt it at this point. I think they've got enough programs. They need to do the implementation.
Okay, Catherine, really appreciate you being with us. That was terribly helpful. Catherine Mann is the global chief economist for Citi. And coming up here next, we're going to talk with a congressman from Georgia, the state where the governor has said he's going to start opening up some businesses as of tomorrow. That's coming up on Balance of Power on Bloomberg Television and on radio. But first, we're going to...
What began in China has expanded...
Oh, just there, Dave. Smashing. Great. Really? Night, Steve.
Yeah, see ya.
Built to take the big knocks. Samsung rugged devices. Easy to use, hard to break. Explore the Samsung Rugged range.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year. And it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
The loungewear essentials that ease you into your comfort zone. The Fitbit that helps you step up your fitness goals. The yoga mat that turns your lounge into a studio. With a choice of ways to pay, you can enjoy being the best possible you. You can say yes when it matters most at very.co.uk. Goods and services provided by Shop Direct Home Shopping Limited. Credit provided by Shop Direct Finance Company Limited.
Dating can be tricky, especially when you can't meet face-to-face. So it's time to get creative. With the easy way to replace physical dates, Video Call from Bumble, the dating app where women make the first move. Here's Anna Williamson and Tom Reed-Wilson with some tips on connecting online.
It's a bit harder to flirt with limited body language, but nothing beats a smile and some eye contact to show them you're interested.
And have an activity plan for your date. This will help break the ice.
Download Bumble today.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Typical Danny. Yesterday was just one of those days. I was running late to dinner, so I had to do my makeup on the bus. But my favourite shirt got ruined when I spilt my foundation all over it. What a mare. But no worries. Just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then whenever you want to browse your favorites, you'll find everything under the Favorites tab.
Stay on top of everything happening in the pro wrestling universe with the Body Slamming podcasts on TuneIn. For passionate recaps of the most recent SmackDown to a pro wrestler's perspective on life and culture at large, search sports and scroll down to the world of wrestling to listen.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player.
active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Want to relive the glory of college football?
Balls over a man, into the end zone.
Come explore TuneIn's classic game replay collection to hear ESPN's complete coverage of the 2019 New Year's 6 bowl games. Don't miss your chance to re-experience the Rose Bowl, the 2020 National Championship, featuring Clemson and LSU.
There are going to be 2 champions on the field tomorrow night. There's going to be one team hold up the trophy.
Search Classic Game Replays to listen for free.
Tomorrow, very important that individuals do their part as well.
We're talking about the guidelines from the coronavirus task force. Actually, they laid out those 3 phases, and one of them, as I understand, to get to the first phase, you had to have a decline in the number of instances and the number of deaths over a 2-week period. Have you had it in Georgia? Because I believe you've not. So is the governor complying with the guidelines that President Trump set out?
Well, and I think that's where the president was, what he was alluding to yesterday, is that the guidelines had called for some of the businesses that Governor Kemp has agreed to open tomorrow, such as the salons, such as the tattoo parlors, that they would not open until phase 2, and he's got them opening in phase 1. So I think that's where the difference is the president saying, I strongly disagree, that ought to be in phase 2 instead of phase 1. But, again, keep in mind the idea was that we would that we would flatten the curve, that we would have our hospitals to be prepared and ready in case we do have a peak, in case we have a surge. And the governor feels very strongly that we are prepared, that our hospitals are prepared, and that if we do have a peak or a surge, that we can handle that peak and surge.
Congressman, one of the big questions on everyone's mind is, as we start to open back up, will we know when we have a problem? How long will it take to find out? And that takes us back to testing. The bill that's coming up before the House later today is going to include $25 billion for testing. Where is Georgia on testing? Are you confident that you have enough testing so that if, in fact, the governor did go a little too fast, you'll know about it fast enough to correct it?
Well, that's a great question, and I will tell you that early on we were lacking in testing in the state of Georgia, particularly in my district, in the 1st Congressional District, which is the coast of Georgia. And that was something that really concerned me. Now, we have done better, and the reports from the hospitals in my district have been very good and very encouraging, saying that, we've got a good supply of tests now. So I know that was probably one of the points that the governor took into consideration when he made this decision. And it's important because going forward, as we attack this, it's going to be we're going to have to take it in a twofold approach, and that is, first of all, it's got to be a combination of technology and intuitiveness. Technology that we've got to have robust testing. We've got to have that. If we see a surge, then perhaps it's time to pull the reins back a little bit. And I have enough confidence in the governor to know that if he has to reverse course, that he'll do that.
And Congressman, let's come back to that bill that is pending in front of the House of Representatives. As I say, you've flown back, as I understand it, from Georgia, so you'll be present for the bill. Good for you. Will you vote for it? And as important, is there a next round that's coming, which is assistance to the states?
Yes, that's a very important question. Yes, I do intend to vote for the bill today. It is, essentially this bill this is not the 4th phase. This is, if you will, the phase 3.5. It's just increasing the amount of money that's going to go to the Payroll Protection Program, the PPP. The amount of money that's going to go to our hospitals, very important because it includes money for rural hospitals, which is very important in my district. And it includes money for testing, as you said, and also for the EIDL, the Economic Injury Disaster Loan Program that the SBA administers. All of those were part of the CARES Act, the 3.0 Act. So this is nothing more than increasing the funding for those particular programs. Now, Will there be a phase 4? And what will it look like? Yes, I suspect there will be a phase 4. My hope is that we will see how phase 3 does first before we jump to a phase 4. There may even be a phase 5 for all I know. Will it include money for local and state governments? I think there'll be some lively debate on that, but yeah, we're not going to leave our state and local governments hanging. We understand that they need help as well.
Finally, just to wrap up on the effects of this new bill, the $484 billion, give us some sense in your district, the 1st District of Georgia, what this could mean for many of the small businesses down there.
No question about it. We've been getting phone call after phone call from small businesses. They are really hurting. Keep in mind, I represent the entire coast of Georgia. Tourism is a big part of our economy, the biggest part of our economy on the coast. And the hoteliers, the restaurants, they have really been hurting through all this. Many of them, for whatever reason, didn't get the first round of the PPP, and making these extra funds available hopefully will get that money to them because they vitally need it. Small businesses account for 90% of all the businesses in America. Over half the people employed in America are employed with small businesses. They are vital to our economy, and we've got to get this money to them. So I'm excited about having the opportunity to put more money toward a program that I think is going to save our small businesses.
And you'll be there in person to help make sure it gets done. Thank you so much. That is Congressman Buddy Carter, a Republican of Georgia. And now, on the way to break, there's some breaking news. The Financial Times is reporting that the first test of remdesivir, that we know that's that drug that President Trump has said could be an effective treatment, the first test has failed. And on that news, Gilead, which is the manufacturer of the drug, is down something like 6.2%, has been halted. And in fact, the S&P average overall is down. We'll continue to report on this as it develops. Once again, the FTE is reporting that the first test of remdesivir has failed. This is Balance of Power on Bloomberg Television and on radio.
There are times when you have to go it alone. But these should not be those times.
With a medical crisis in any other central bank execute?
Bloomberg Surveillance with Tom Keene and Jonathan Farrell.
Walk me through the dynamics that are going to shape the euro in the coming months.
Weekday mornings at 7 Eastern.
Do we have the ability to coordinate with this virus?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
When things move this quick, do things break?
Bloomberg, the world is listening.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Welcome back to Balance of Power on Bloomberg Television and Radio. Well, I spoke with Speaker Nancy Pelosi about that bill, that new spending bill that's pending in front of the House of Representatives today. But it's not just the economy that is going to look different with the coronavirus. We'll also have to take a look at what's going to happen with voting. And she addressed specifically what she anticipates come November.
I don't think anything that we're doing now should have anything political about it. Every bill that we have passed has been strongly bipartisan, as 3 in March and then this additional bill. And as we go forward, it'll be bipartisan as well. But one of the things that we want in the new bill is more funding to protect the integrity of our elections. As you saw, the Intelligence Committee in a bipartisan way, released a report saying that without any question, the investigation into the Russian interference into our elections was substantiated. It was nonpartisan. It was based on fact. The intelligence community tells us still the Russians are 24/7 trying to disrupt our election again. So we want to protect the integrity of our critical infrastructure of elections. We also want to be able to have people vote by mail. Especially at a time of concern about health issues, it's better for them to vote by mail, to get their ballot sent to them at home, to have same-day registration for those who do want to go to the polls, but to have the demand on poll watchers and the rest be much, much less. So we will be seeking additional funds. We had $400 million in the first CARES Act. We need much more than that now so that we can guarantee the integrity of our elections. So we're talking about the lives of the American people, the livelihood of our their livelihood and the strength of our economy, and the integrity of our elections, the life of our democracy. This is very, very important. Now, more than ever, more important to be able to vote by mail.
Speaker of the House Nancy Pelosi on what she sees coming ahead in November with those elections. And now we want to bring you an update now on Gilead. As we said earlier, it fell and was actually halted in trading shortly. It's a manufacturer of remdesivir. This is on a report out of the FT that its first test of that drug as a treatment for coronavirus failed. Now it is trading once again and is down about 1.6%. It seems to be fluctuating rather wildly. So we will continue to cover that story as it develops. That does it for Balance of Power on television right now. We're going to go over to radio in the second hour on radio. This is Balance of Power. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury in the time of coronavirus. Pour one out for Oktoberfest. Munich's famed folk and beer festival has been canceled for the first time since World War II, a major blow to the Bavarian capital's economy. The 2020 edition was due to take place between September 19th and October 4th and bring in around $1.3 billion for local businesses. Meanwhile, Portugal doesn't expect hotels in its beachy Algarve region to open at all this year. With foreign tourists staying away, local bookings don't make the seasonal math work. Tourism accounts for about 15% of Portugal's gross domestic product. Not slowing down, Lotus Cars. The British supercar brand is working on a new entry-level model that will provide enough interior space for everyday use. The as-yet unnamed car, destined to be the company's last combustion engine model, will be priced between $67,000 and $123,000. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
You're living in a world built on science, political and economic.
You've got to believe the labour market gets hit.
Computer and medical.
Clarify where we are on a test.
It all makes a difference.
What do you think needs to happen in terms of governmental response?
And it's all here.
He expects the virus to peak quite a long time from now.
Get your science straight.
The hand-washing campaign, is this actually a good strategy?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Charlie Pellet. It is up an up day on Wall Street, but let's begin with a developing story. Gilead's potential antiviral drug for the coronavirus has flopped in its first randomized clinical trial. This, according to the FT, citing draft documents published accidentally by the World Health Organization and seen by the Financial Times. It said the Chinese trial showed remdesivir did not improve patients' condition or reduce the pathogen's presence in the bloodstream. Gilead shares, they are lower now by 4.8%. It is an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing. S&P up 17 points now, a gain of 0.6%. Well off session highs. We did see the S&P up by 45, the Dow up 172. That is a gain of 0.8%, while NASDAQ up now by 63 points. For the NASDAQ Composite Index, that is a gain of just about 0.8%. The 10-year up 3/30 seconds with a yield of 0.60%. Gold up 0.7%. And crude oil, the rally continues there. West Texas Intermediate surging again today, up by 26% at $17.40 a barrel. And with more on the commodity story, here's Bloomberg's Renita Young.
Yes, WTI is moving, but trading remains volatile with the market under intense pressure from a swelling global supply glut. WTI prices are still down more than 70% this year, and gold investors are weighing the prospects of another wave of stimulus in coronavirus-hit economies as gold-backed ETF inflows head for a record month.
And that's Bloomberg's Renita Young reporting. France is reporting 516 virus deaths. That is the lowest in 4 days. Again, recapping, equities higher, S&P up 21, a gain of 0.8%. The Dow up 0.9, NASDAQ also up by 0.9%. 102 on Wall Street. Time now for the Market Drivers Report with a focus on American depository receipts. Here is Dave Wilson.
Thanks, Charlie. ADRs are higher, though not quite as much as U.S. shares. The S&P ADR index is up 0.7%, and the S&P 500 is higher by 0.8%. South African gold mining ADRs are up after the precious metal set a record in the country's currency, the rand. AngloGold Ashanti has risen 4.9% in U.S. trading. Goldfields is up more than 11%, and Harmony Gold Mining is up almost 16%. Francis Vallejo has risen 3.8%. The auto parts maker said it expects Chinese sales to return to last year's levels in the second quarter. Now, about 30% of Vallejo's revenue comes from China and other Asian countries. Dutch ADRs of Unilever are down 2.4%, and the company's British ADRs are down 2.1%. The consumer product maker's first quarter sales were little changed rather than rising as analysts expected in a Bloomberg survey. And Swedish truck maker Volvo has dropped 6%. CEO Martin Lundstedt said it will be hard for the company to cut costs enough to offset projected sales declines in the second and third quarters. Volvo's first quarter sales dropped 15%, Charlie.
We thank you very much. Bloomberg's Dave Wilson keeping track of those American depository receipts. Again, recapping equities higher on this Thursday. S&P up 21, a gain of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Balance of Power.
Everybody in the world has one common enemy, and that's to win the war against this virus.
The first thing you do is listen to the medical professionals.
Those people that lost their pay, we want to see that pay continued.
Where the world of politics meets the world of business.
Our priority is the health and well-being and the lives of the American people.
We want to make sure that we are continuing to support our hospitals.
We've unleashed our most potent weapon of all, the courage of the American people.
Balance of Power with David Weston on Bloomberg Radio.
So the Congress is about about to enact $484 billion in new spending, but already Speaker Pelosi and Majority Leader McConnell are squaring off over aid for states. Oil stages something of a rebound, and 26 million Americans now have lost their jobs in the last 4 weeks. From New York, welcome to the second hour of Bloomberg Balance of Power. I'm David Weston. Well, we had 4.4 million more jobless claims today, less than had been expected, but still an enormous number. As I say, bringing to 26 million people the number who have lost their jobs in the last few weeks. We welcome now Yelena Shelyetova. She is senior U.S. economist for Bloomberg to go over exactly what these jobless claims tell us. Yelena, thank you for being with us. What do you take away from these numbers?
So it seems like the initial jobless claims numbers are peaking. They have peaked, I should say. But as you mentioned, they are still running at an enormous weekly speed. So that means we will basically see a huge reading on unemployment rate when the jobs numbers are posted for the month of April. So we will see, our forecast suggests we will see a 20 million decline in payrolls and a spike in the unemployment rate to something like 15%.
So, Yelena, how reliable are these numbers? Because I've read that some of the states are having an awfully difficult time keeping up with the filing of the claims. So some of them may not be going on exactly what is filed, but actually estimates.
Correct. And another complication is that some people are filing multiple times. Some of them just simply cannot get through and be processed, but others just simply file multiple times because of frustration. So initial claims numbers may not be reflecting a true picture, as you mentioned. So that's why we actually like to look at the continuing claims readings. But they are also surging. So there are 16 million. There are 16 million people who are receiving jobless benefits. So that itself is a striking number, and that will also imply that the unemployment rate, the official unemployment rate, will be off the charts in April.
Yelena, one of the things that the government was trying to do, specifically the Congress with President Trump's support, was to try to ameliorate this by getting a lot of money into the hands of small businesses. $349 billion already gone out the door. They've now enacted another, I think, $360 in the bill that's supposed to pass today. Are we seeing the effects of that yet, or is this over and above what might be done with the small businesses?
I'm afraid this will not be enough, actually, because how fast did the last tranche run out? Maybe in a couple of weeks, and we'll probably see the same with the latest tranche running out pretty quickly. So, and each consecutive program will be harder and harder to implement, I think. So it's helpful. It's helping businesses, that's for sure, but this is just providing some bridge money for them to remain in existence. It's not going to boost economic growth once the virus is over.
So, Yelena, what about other economic indicators? We had PMIs out today, both Europe and the United States. The European ones, I read someplace, somebody called them eye-wateringly bad. What about the United States? They weren't quite as bad as people expected?
They were still absolutely dismal, even though they were not as low as those in Europe. One common thing between them is that you see a much more significant deterioration in the services sector of the economy. Usually during the recession, manufacturing gets hit pretty hard, but this time around it seems like the services sector is bearing the brunt. And, well, that is not surprising given the the unique nature of this crisis. So this number's obviously very bad, but it's not nothing surprising given what we already saw in different metrics, including initial jobless claims.
Yeah, you mentioned the unique nature of this crisis. Part of it is a lot of services are delivered in close proximity. You have to actually be there to deliver the services. Does this suggest that maybe we could have a manufacturing rebound before we have services rebound?
That's possible, and especially because there will be a lot of demand for certain goods. So But again, going back to the unique nature of this crisis, that's why we think the recovery will be very slow, because these jobs that are in travel, entertainment, and restaurants, they will be very difficult to reabsorb right away, because quarantine measures will not be removed all at once. It will take time, and it will be a very slow process. So all these people losing jobs right now, they will not be able to re-enter the labor force right away.
Yeah, it's fascinating. What other economic indicators are you looking at to give us a sense of how bad we are off?
Well, we are going to get the first print for first quarter GDP next week, actually. So, and previously we thought we could still have a positive reading for the first quarter. But given like the depth of the crisis, which was already unfolding in the month of March, the first quarter GDP result will be negative.
Right, no question about it. Okay, thank you so much to Elena Shalyadova. She is senior U.S. economist for Bloomberg. And now we have a very special guest, Gary Cohn, former head of Goldman Sachs. He's going to be speaking with our colleague Eric Schatzker, who in an interview.
To our Bloomberg television and radio listeners worldwide, I'm Eric Schatzker in New York City. Few people bring as authoritative a perspective to the economy and to financial markets as our next guest. He was director of the National Economic Council, and before that, he was president of Goldman Sachs. I am, of course, talking about Gary Cohn, who is joining me this afternoon from Long Island. Gary, good to see you.
Thanks for having me, Eric.
Gary, as you know, there's a very wide range of views, ranging from optimistic to, frankly, dark and depressing about the prospects for the U.S. economy right now. Where are you on that spectrum?
Well, Eric, look, I think I'm probably somewhere in the middle. I try to be very realistic to what's going on and where we are economically. You know, look, you have to give the American citizens enormous credit for doing what they were asked to do. They were asked to stay home. We basically took over 90% of the U.S. population and told them to stay home and withdraw from the economy, withdraw from the workforce. A lot of them, some of them were able to work at home, but a lot of them were not. So we have been very good at doing that. We are now going to ask them to re-enter the economy on a gradual basis. And I'm confident, although I've got some trepidations, that people will re-enter the economy. They'll re-enter the workforce as needed. And we're going to need to encourage people to come back to the workforce. We're going to need to encourage people to go back and live their lives as normally as they can, while still being very safe and very conscientious about the reality that we have just lived through and are going to continue to live through this COVID-19 pandemic. And so we're going to have to adjust the way we've lived our lives, but we're going to be able to do that. We've seen this happen in other parts of the world. The Chinese have learned to live in an environment where they are more concerned about germs and the environment and in the society they live in. We in America are now going to have to start living our lives like that for some period of time.
Okay, so that you raise a very good point, Gary. The Chinese example is instructive. China is, so to speak, reopening its economy, but people aren't going to malls. They're not going to restaurants. There are no events. Yep. There are no large-scale gatherings. Is that the future for America for the time being?
Well, Eric, I think this is very incremental. So we should start by opening smaller retail shops. Every neighborhood has small retail shops. You know, look, I know a lot of people are dying to go get their hair cut. It seems practical that you could make an appointment, you can go get your haircut, they can schedule it so people aren't waiting there. You walk in, you get your haircut, you leave, they wash down or wipe down the chair and the instruments in between. And that part of the economy we can open. Small retail stores in your neighborhood that have 2 or 3 employees historically and usually have 2 or 3 guests in the shop. You can manage those, and to the extent there's more than 2 or 3 people that want to come in, you have them wait outside. that will be the short-term solution. And as we get more and more comfortable with that, and we don't see a spike or a reinfection rate higher than we have now, we will be allowed to relax that environment. But yes, that's what we should get used to. That's what we should be accustomed to. And by the way, I think we're accustomed with that now. I think most grocery stores and most essential stores in the country right now have that have that mechanism right now. You know, the grocery store in my neighborhood right now does not allow more than, I think it's 50 people in the store. We queue up 6 to 8 feet apart outside, and we very patiently wait to go in, and we're happy to do that. We wait one person out, one person in. That is going to be how we're going to gradually get back into a normalized economy. As we see the infection rate stay where it is or go down, we'll be able to allow more people in the store, and we'll pick those numbers up. But it's going to be a natural feedback cycle. If more people go in the store and we see a slight uptick in the infection rate, we'll back off to the 50 people that we knew sort of were. If less people get infected when we have 60 or 70 or 80 people in the store, we won't have to queue up outside. So we're going to have a give and take natural learning cycle here.
Is that a U-shaped recovery?
I think it's a U-shaped recovery. I'm trying to foreshadow or think about a U-shaped recovery, knowing that certain businesses or certain events won't come back in that U-shaped recovery for some period of time. So look, I don't think we're going to basketball games or baseball games anytime soon. Do I think that basketball might play and baseball might play without fans in the stadium in a controlled atmosphere? Yes, I do, and I think we'd probably all enjoy having that entertainment. But that's a different type of environment where you've got 20 or 50,000 people going to a specific event.
Gary, Scott Gottlieb, the former FDA commissioner, drafted for the country a roadmap to reopening the economy. As you know, it relies heavily on logistics and it relies heavily on compliance. Do you think what Scott outlined is a viable approach?
I do. I have talked to Scott during this quite a bit. I think Scott has been very practical. He's tried to be reasonable in what he suggested, and I think he is trying to lay out a way that we can try and get back into a more normalized economy as soon as reasonably possible. So I think what he has laid out is quite reasonable.
What do you think are the biggest obstacles to reopening? You talked about your trepidation and the gut instinct that you have to temper your optimism with realism. What do you think those challenges are?
So one of my concerns is we need people to want to go back to work. There are a large amount of people in this country right now who are getting government benefits that may be in excess of what they'll earn when they go back to work. And look, that's a whole nother conversation that we probably need to have in this country at some point. But if you're home doing nothing, earning more money than you would if you went back to work, it's harder to get those people back to work. I know of and have heard of many sort of fast food restaurants right now who are doing curbside pickup, who are trying to hire people. I see help wanted signs in a lot of the local retail establishments who are doing curbside pickup, and they can't